Berkshire Hathaway, which many listeners here will understand extremely well. People say, well, how can you have such a concentrated position in that very, very big company? And that is a huge risk. And I will say to them, well, if you study the businesses and you understand what's going on inside the organization, then you'll realize that it's perhaps the least risky position in my portfolio. And they just cannot see it. They cannot see it.
Welcome to the Investors Podcast. I'm your host, Stig Brodersen, and today I'm joined by no other than Guy Spier. Guy, thank you so much for making time.
Stig, it's a pleasure to be with you, and you've prepared an amazing set of questions which made me think quite a lot, so that's impressive. And I approach this conversation slightly nervously because your questions come from a place of curiosity and interest and desire to learn, so there's nowhere for me to hide.
Wow. So we're coming off strong here, Guy, and you're putting a lot of pressure on me. So, but thank you for saying so. It means a lot.
It goes both ways. When the listener finds out about the questions, you'll see that it's also like, holy moly, I've got to try and do justice to these questions.
All right. So let's jump into the first question here, Guy. So as many of the listeners know, Buffett has famously said that you should invest in a company that could be run by an idiot because someday someone will. And I don't know how many in the audience I'm going to offend with this question, but I couldn't help but think of royal families whenever I heard that quote because, the main qualification you can say to some extent is coming out of the right womb. It's not like they're taking education, submitting the resume and go through job interviews and it's a different process. And then you think about royal families, and they maintain their prominent position for centuries. So it makes me think, Guy, what can we learn from royal families about moats?
Yeah, and it's such a great question. And when you wrote it, I realized, and I think maybe I've talked about it somewhere, I realized that there's been a couple of books written about it. And so I've now gone and ordered the books. So I will be more knowledgeable down the road. And so I as I was trying to think about it, let's be clear. I mean, first of all, royal families and any kind of nobility, the history of that nobility will have been that at some point they will have either fought a battle and won, and they would have taken a castle, or maybe in later European history they would have been given property in reward for a service to the monarch. But at the end of the day, underlying all of that, what is it? Karl Marx, all property is theft. So I'm not sure that we can, because now in the world of business, we're playing according to rules. We're not engaging in violence. There are tools that we use. Maybe it's innovation. Maybe it's all sorts of ways that we try and get advantage in the business world. So, but which I don't think are particularly relevant for how royal families achieved their position. So let's just get that out of the way. Nobody's suggesting that one should learn from the ancestors of these royals, through violence or other things to get where they are. But if we think of these kind of like juggernaut blockbuster businesses like Coca-Cola or American Express or Nestle, and in a sense, those are kingdoms. And inside of those kingdoms, there are people who kind of like royal families, if you like. So what have I learned from trying to understand? So the first thing that happened to me, if I think of the royal family that I know the best, which is the British royal family, not personally, just through observing them, is that I went through a period of being a sort of a strong Republican where I kind of like enjoyed being on the subway, on the tube in the UK and saying things like off with their heads. And to every single member of the royal family, I deeply apologize for having said that, because I don't think it's, I can totally see why the British royal family is absolutely key to the functioning of British democracy and the British Constitution. So I went through an evolution where I felt like I was a Republican, and then I came to this grudging acceptance and understanding that the royal family was absolutely central and key to British public life. And it was only in the last maybe 3, 4, or 5 years that I discovered that I could actually learn from their behaviors. So I guess I hope that this comes to moats, but I would start with, I used to think that all the titles that the royal family can give out, or the king can give out in the case of the UK, were just very, very stupid. And then I realized that there's quite a lot of discernment and care that goes into giving out knighthoods, and there are various different kinds of knighthoods, various different degrees of exclusivity that I don't know much about, like Knight of the Garter, and I don't even know all the names. And then there's a basic Sir somebody, and then there's titles like OBE and CBE. But I started to realize that those titles are given out in subtle ways to adjust and to kind of like make quiet, behind the scenes statements about what kind of society the royal family wants to see. So, and I kind of looked at that and said, what can I do that's similar? Stop being angry at them and start thinking, what can I do that's similar? And I realized that recognition. So these titles they're not anything physical. You're not giving out a castle, you're not giving compensation, you're not giving stock options, you're not giving any of those things. Purely giving recognition to people is something that we can all do, and that I realized that I did far too little of it. So, just before this thing started, we had a very short time for the listener. Stig, you had a birthday card from me. And in a way, that's me saying, I recognize you. It's a very, very simple recognition. But I want to tell you, because in preparation for this, and I just happened to pull it off the wall, I have it here. So Warren Buffett understands this, and it pisses me off that everything I've learned, Warren Buffett, I realize, knows this. So I'm just going to flash this up. I don't know if this is, but he sent me a letter, and he kind of like, what was the letter? It was, he'd read my annual report and he liked it. And so he wrote me a letter. I was blown away. And of course, what I did was put it on the wall. But how different is that from a royal seal of approval? How different is that from granting an OBE or a Sir or something to somebody? It seems to me that it's the same thing. So want to try and answer your question and make one very, very small point around the royal family in the UK, is that recognition is a way of exerting soft power and extending your moat. So the more people I can recognize in my life in a genuine way, and it can be as simple as writing them a note or a letter, is going to actually enhance their loyalty to me. Because you can imagine my loyalty to Warren Buffett is enormously increased through that letter. It was high anyway. And you can imagine that the loyalty towards the royal family is severely enhanced and increased through those recognitions. And I think that so many people go through life desperately hoping and wanting and desiring to be recognized themselves, And here you have the monarch, who actually has a whole administration that is dedicated towards the monarch recognizing other people. And one can say, yeah, well, they're the monarch. But the fact of the matter is, we can all do it. And people would somebody in the business world prefer to get recognition from Warren Buffett? Absolutely. But they also don't mind getting recognition from me. So that is one sort of like minor way in which we can extend our moats through the royal family. I'll just give you a couple of other thoughts before I let you come back and maybe redirect me a little bit more precisely. So if we think of royals and we think of the history of royal families or kings and queens in Europe, it goes all the way back to emperors. It goes back to the Roman emperor. The key about the Roman emperor, and if you go before that to, for example, the Egyptian emperors or pharaohs, is that they were also considered to be gods. And there was a kind of an interesting split in European history where the emperor was no longer a god, was a human, and there was a period of confusion. But ultimately, the role of king, the person who has access to physical and worldly power, and the Pope or religious representatives who kind of had access to otherworldly, that eventually split. But the association that humans have in their minds with a royal family, to association to kind of like the ethereal godliness stuff that we could never reach, is still extraordinarily powerful. And so obviously the royal seal of approval is an incredible thing, because it gives you an association with that. Royal families, it seems to me, use all sorts of tools to enhance that association, that sort of like otherworldliness, that sense that you've gone through the looking glass and you're in the world of the gods, so to speak. So if you take Buckingham Palace as it's a symbol, and it's also a sort of an accessory for the royal family. It's a statement about their power and their centrality in British life. If one actually looks closely at Buckingham Palace, what you see is that it's a massive facade, and actually it's quite kind of, I wouldn't say small and cute, but it's all about the facade. And when you drive through the facade on the other side, it's actually quite ordinary. And so it's about presenting a face to the world. And I think that, we talk a lot in the value investing world about having an inner scorecard and about having the same, being the same person in private as we are in public. But I think that I've learned about that actually, and it's not so much the facade, it's the way you create authenticity. So is the King of England also the King of England if he's standing in the middle of the street somewhere? Yes, he is. But if he's going to make a statement, or if he's going to make an award, or if he's going to appear on his birthday, that symbolism of appearing on the balcony of Buckingham Palace is really, really important. It helps the British public to connect and feel a certain way. In a way, you could say it's a ritual. So what I realize is that doesn't mean that I have to inhabit Buckingham Palace or that I have to have some grand office building, but I need to be aware of the symbolism of what I'm doing, and you could even say of what your business is doing. So to give one example, a very long time ago, I remember seeing, it was an interview with Warren Buffett in Fortune or Forbes or something like that. And apparently what I remember reading was that he insisted in being photographed at McDonald's. He said, or at a sort of a family burger place. And that symbolism for Warren Buffett was important. He knew what he was trying to present to the world. And so it's not that you have to be in Buckingham Palace, but I think that we are more effective in business when we kind of pay attention to that association. So I'll give you an example, another example that is just recent. I mean, it was a conversation yesterday. So, I do this charity lunch now every year, and the latest one that I'm going to meet is going to be in New York. So the person said, look, I'll meet you anywhere. I really don't care. As long as we spend the time, I'm really happy. And the person I was 5 years ago, the person who'd not studied the royal family in the same way as I have now, I would have just said, yeah, sure, well, then let's just meet anyway, somewhere that's convenient to you or to me. And actually, I insisted. I said, no, we're going to meet at somewhere that's meaningful and symbolic. So in this case, we're going to meet at Smith and Wollensky's, which is where I had my original lunch with Warren Buffett. Because even if we go back to the King of England, and we take, let's say, Chris Hahn, who is a famous investor who was given a knighthood in recognition of his services, huge amounts of money that he's donated to charities. And so let's say Chris Hahn says, oh, that's a great honor. I don't need to come to the ceremony. And actually, if you want to knight me, you can knight me anywhere. It's okay. And let's say the king's not got much time and he says, yeah, that would really suit me as well. Well, no. The formality of doing it in that way, in front of people, at Buckingham Palace, with a sword, with probably some kind of letter or seal or something, it creates a symbolism that is important for everybody around it. So the royal family is extremely aware, or the people around them, they don't want to desecrate that sort of that imagery. And on the one hand, the person I was more than 5 years ago would have said, who cares? But actually, we all do better when we understand that pretty much, not everything, but an enormous number of things we can do have a symbolic side to it. And the symbolism is important. And that doesn't mean we have to ape the royal family. And I would tell you just to, and then I'll stop with this because I may be rambly, and then you can refocus me. Is so I was wanted a really good design for my annual report, and there's this awesome woman called Cecilia Wong who's been helping me. She designed the cover of my book, and I met her through William Green, and so I'm with her, and I'm saying, look, I'll show you examples of annual reports that I think are really, really good, and you're going to help me to do something. So of course I showed her I said, look, Cece, the best example I have is the Berkshire Hathaway annual report, but it's not designed, and I showed her the web page, and she's a genius, I can tell you. So she used to design the covers of Time magazine for Asia. And so she comes back to me and she says, Guy, you don't realize both the Berkshire Hathaway annual report and the website are extremely well designed, and there's a design design there. I'm like, the website has got nothing there. And she says, no, it's saying, this is what it's saying. It's saying we're not about extraneous fluff. We're about the words of Warren Buffett. We're about letting you get to the key information easily and presenting it to you up front in a way that so we're no nonsense, sort of no bells and whistles and no fluff kind of organization. And that is a communication, and that is a symbolism. Or if you think of the Berkshire Hathaway meeting where Warren and Charlie appear, well, now it's just Warren, but they would appear on that table with nothing else, just an ordinary backdrop. That in a way is the symbolism that they want to create. But that doesn't mean that I have to ape Warren and Charlie. I don't have to ape the royal family. So just give one example. In our company holiday card, we actually did a line drawing of my office building, or the office building where I work. And it's kind of, so what's the point there? Well, it is where I work. And on one hand, it's kind of like completely irrelevant. What's important is what's going on in my mind. On the other hand, people deserve to know where I work. And there is a kind of an association there. It's where I come into work every day. So on the back of the card, there's a drawing of that. And so that's me directly learning. I don't want to live in Buckingham Palace or working in a Buckingham Palace. And I've chosen the environment that I work in, and I want to give people a sense of where that is. So I did a drawing. And so understanding that symbolism, and that everything we do has a symbolic nature, and we ought not to ignore it. So there are a few things that I've learned from the royal family. Back to you, Stig.
Thank you, Guy. There's so much to talk about here, and in my preparation here for this interview with you, I listened to a bunch of the interviews you've done just in general, and you mentioned Joseph Campbell quite a few times, and I thought to myself, okay, I better order some books and get started, and ironically, then you sent me this wonderful card with a quote by Joseph Campbell.
Yeah.
And he talks about this myth, and I don't want to be like too granular in the money myth and all of that, but one example he comes up with is he's talking about the United States, and he's talking about how it's very much a country that's ruled by a lot of different laws, a lot of different systems, because that you have to do that because people come from so many backgrounds, and then he compares it to American football and said, like, the rules there are very intricate. And he compares it with rugby and says that, it's like the British sport. I'm no expert in rugby. And these Americans go there and they come up with the forward pass, and the British are like, that's not how we do things here. And it was sort of like interesting. Like, it's not in the rule book. So some might say, if it's not in the rule book, I can't do it. I'll just do it. And then, the British are like, that's just not how we do things. So could you please not do that?
Yeah.
How did that, if at all, play along with this idea of the royal family, the idea of the myth and the shared history that we all have to various extent?
Yeah, so I'm so glad that you found your way to Joseph Campbell. I mean, I don't know how I found my way to Joseph Campbell, but he was just like blew me away. He was the key that unlocked so many things for me. I think that there are writers that I've read that in a way have helped me to come home to myself, and to, there was a civil war going on. For example, there was a civil war going on inside me between my rational side and the side that had studied science and wanted to believe to exist just in the material world. And then, and then what do you do with this whole mythological side, or with this like religious and spiritual side? And he gave me the key to understand that they're sort of like two sides of the same coin. So, and what you're talking about there, if I understood it correctly, is the term that the British would understand so well. If you don't think you don't understand rugby, I'll take you into even a more esoteric sport. And the famous phrase is, well, that's just not cricket. And this idea that there are rules that are behind the rules, and so the rule book doesn't cover it all. There's plenty more, and there's a kind of a shared understanding of what this game is supposed to be about, and that should modulate your behavior. And in a way, I mean, that's just not cricket. And it sort of comes things that you don't do, even though they're not in the rule book. It comes down to understanding perhaps that people in that game are not playing to win. They're playing to, or no, they're not playing to win that game. They're playing to win the infinite game, which is the game of continuing the relationship with these people and making them like you and want to play another game with you, and displaying your personality as being willing to take the win when it's acceptable to take the win, but also being willing to stand back and not push your advantage to the very limit, because it would be kind of not right to do so. And actually, I just feel compelled to say it. I think that, I don't know if you're following this women's boxing at the Olympics. And, if you take a very, very narrow reading of the rules as the international, so there's this Iman Khalif woman, and I think that she is now in the finals with another person with XY chromosomes, which are kind of male chromosomes. If you read clearly according to the rule book that the International Olympic Committee has written on, how you define female and male and what allows somebody to compete as a female, they meet the criteria, period, end of story. But when you see these boxing matches between somebody who's an XY chromosome, which is effectively a functional male, versus an XX chromosome, which is a female, what you see is, even if they're labeled female, that you see a man punching a woman, and it offends that basic sense of decency. And that would be an example of, that's just not cricket. It's what the British would say. I think that just trying to tie that in with Joseph Campbell, actually another person who comes up for me as you say that is Yuval Hariri, who he does it in a slightly different way, but I think that Joseph Campbell, anything by Joseph Campbell, what he woke me up to is, so the title of one of the books is called Myths to Live By. And the thought, sort of like mythological thinking. Why would a rational person engage in mythological thinking? Well, the reason why we engage in it is because it's part of us, whether we like it or not. That there are motivations that we have and stories that we're telling, inner voices about the meaning of what we're doing and why we're doing it, that we are far better to be conscious of those stories that we're telling about ourselves as individuals, as families, as societies, than not be conscious. And I think a bit like, what I was talking about, symbolism with the royal family, nobody's telling somebody to live by one myth or another myth. I think that the exhortation is just be aware of the myth that you are living by, of that common understanding of what it is that you're doing. And in a sense, what you have in that boxing fracas is that the myth, or the kind of like the underlying ethos with which this Algerian boxer is approaching the women's boxing tournament is, this is, the game that she is playing, and her coaches and the Algerian Olympic team are, study the rules and figure out if you can win according to the rules. And the goal is to win according to the rules. and life is a battle, and there are winners and losers, and we plan to be winners. We plan to take home the most medals, and that is a kind of like a myth, sort of like war, if you like. The world, or the word that would be have been used in the past is Manichaeism, which is kind of like life is just a struggle between good and evil, and it's just a constant battle. And we're going to be the good ones, and we're going to fight according to the rules. Whereas the other side, the people are crying out. J.K. Rowling, for example, has been a big advocate for this, are crying out and says, first of all, this breaches a basic sense of unfairness. And in an article that somebody wrote for the Daily Telegraph, where I'd have to look her up, where she wrote, even if, according to the rules, she had the right to compete, the fair thing to have done would have been to withhold, even if she was a functional, or she was declared female at birth and met all these criteria to be female, knowing that she had XY genes, the right thing to do would have been not to compete. And that's this kind of like the rules behind the rules. That's just not cricket. Hey, the game we're actually playing, Algerian team, is not a game of win at all costs according to the rules. It's a game of creating friendship amongst men and creating respect across athletes and across countries and across time zones by allowing a fair fight. And I was on the tennis court yesterday with my daughter and her boyfriend and my wife. Yeah, I've played more tennis than them. I could have smashed the ball. I could have won 6-love if I'd have wanted to. Instead, I played at their level, and we actually played the game, and we modified the rules to try and get the rallies as long as possible. But, what are we trying to do? We're actually trying to have fun. So, if, and forgive me, I hope this is not too rambly, but what I would love to do with the Algerian team in Man Khalifa is sit down and say, look, there is actually a different ethos by which you could play this. There's an Olympic spirit here. And I'll give you one example of that, which is I think he's a Spanish runner that just came up on my Twitter feed recently at a competition about 3 years ago. So he was running against I kind of like almost want to try and see if I can find it, but maybe that would be a bad idea. He was running in a cross-country race, and the Kenyan runner was ahead of him, and they ran, it kind of was a duel between the two of them. They were far ahead from the pack. And at the very end of the race, with about 20 meters to go, this man, Ivan Fernandez, I think is his name, this man, the Kenyan runner who's won the race at that point, thinks he's crossed the finish line, and he's starting to look at his watch, and he's starting to look around, and he's broken into a walk, and he's just delighted that he's finished. He's actually not crossed the finish line. And this runner comes up behind him, and what he could have done is just sprinted across the finish line and taken first place. And instead, he grabs the Kenyan and he says, we're not past the finish line. You need to keep running. There's another 20 meters to go. And runs behind him with his hands on the Kenyan runner's shoulders. And, in a split second, he made that decision. So many people would have just run across the finish line. And, he was playing the infinite game. He was saying, there's more to this than just winning this race. And when he was asked afterwards, why did you do that? He said, look, the guy won the race. He beat me. We were dueling each other all the way through, but I just couldn't keep up with him. He was a better runner. And so he won. And I wasn't, it would have been a violation of some, of that myth for me to run ahead of him. And so what's incredible about that, I don't know what he's doing right now, is that he won in a much bigger sense. So we talked about, my office, Buckingham Palace, the symbolism of that. I think that just to bring it back to you and allow you to refocus where you're going to go next with your next question is, it's like there is a mythological dimension to so many things that we do, and nobody's telling us what myth we should live by. But become aware of that myth, become aware of that story, be in a relationship with it, because it will make your decisions so much wiser and so much better. And Joseph Campbell did that for me. And just I brought up Yuval Harari. The reason why I did is because Yuval Harari talks about how so much of what creates modern civilizations are the stories that we tell as a common myth, as a common story. So he talks about the story of money. We all agree that money has value, and it's only because we all agree that's a kind of a myth that in a way is being challenged now by, dare to say it, Bitcoin is being challenged. It's challenging that, it's changing that myth. And they'd be like, no. That's not the way it works, and actually Bitcoin is changing that potentially forever. And so again, like become aware of that, You don't have to agree, but be aware.
Thank you, Guy. I want to talk a bit about your fund, Aquamarine,
Yeah.
and sorry to make the transition so abrupt and talking about boring stuff like track records.
All good.
One thing that I thought about a lot here recently, and I would be very curious to hear your thoughts on this, is this idea of, let's run our track records 1,000 times. And
Yeah.
I'm looking here at your track record. So since inception in September 97, you compounded better than the S&P 500, so 9.3% CAGR
Yeah.
compared to 8.7, and that is of June 30th, 2024. And so one thing that sticks out is, you've been beating the S&P 500 for more than 26 years. That's no easy task, and it also makes me think about, obviously it's very, very tricky to do this. What would happen if we took out the role of luck? And what would your track record look like? And I have a background as a poker player, so I can look at a poker database and then say, I play king queen from the cutoff seat. Sorry for the lingo. This way, how often do I win or lose, and by how much? Like I can go in and analyze a lot, and I get a very quick feedback loop if I get enough data points. But that's not how investing works. And so, if I were to ask you, what if we ran your portfolio 1,000 times, stripped out the element of luck, as impossible as that would be, knowing that you're probably a much better investor today than whenever you started, but we can't pull that lever. We have to run it 1,000 times. What would it look like?
Yeah. So just for the listener, these are the kinds of incredibly thoughtful questions that Stig wrote to me, and shows that you got a few brain cells in there that are ticking over. And so so when I look at my track record, first of all, I'm proud that it's beaten the S&P, although not in the last recent history. And I'm proud that it's done that net of every single expense. So it's a real outperformance over those 26 years. And as I've written in my letter, boy, do I wish it was higher. Boy, do I wish I could say, well, I've, 6%. Chris Hahn, I've mentioned him once before, 6%, 7% outperformance versus the S&P, I believe. So that's kind of like an astounding number. That's an Omaha number, if you like. And do I wish that I had some very, very more significant outperformance? Absolutely. And I can look back and see some really humongous mistakes that I made that would have made a huge difference. In the one case, the investment in Horsehead, and then doubling down on it at a point where they were ramping up their debt and were getting into a different technology that they didn't understand, is a pretty huge mistake. So in my ideal world, I could have cut that out. that would count for a huge difference in outperformance. And I'd like to believe that in those 1,000 different reruns of my life, there's a smaller proportion of those reruns where I made that mistake, and that there is a larger proportion of those reruns where I chose not to double down on the investment at the wrong time, and where actually I didn't make the investment, or where I noticed that the debt levels were rising. So at the same time, I can't really evaluate the probability that I would have not made that mistake, and I would come out at a 50-50, for example, on that mistake. And to give one other example, that mistake arose during the time, And there's interesting sort of feedback loops here that my book had been published. And I was determined to make the book a success. And so I had quite a bit of attention on doing things that helped make the book a success, but did not necessarily make me a better investor. And I'd like to believe that in a rerun, I would avoid that mistake. And, I think that you have to be clear with yourself. Am I going to be a journalist and try and sell, get as many eyeballs as possible? Or am I going to be an investor? Those are two different things. And I don't think you can do them as the same person. And that is clear to me now. It wasn't clear then. But so long story short, I'd love to cut out the mistakes in the majority of those 1,000 times. But I think that actually those mistakes, it's a 50-50 that I would have done them. And so I would place my performance in the very middle of the distribution of those 1,000 times. Yeah. So.
Yeah. No, I think that's wonderful that you would say that, Guy, because if we continue with the poker metaphor, I've been around so many poker players in my life, and every time they lose, it's because they're unlucky, and every time they win, it's because they're fantastic.
Geniuses. Yeah.
Yeah, and
Yeah.
and I do see some pattern recognition in the world of investing. I have to say.
I've played very little poker in my life, but it makes me think of the very little golf that I've played. And I don't know if you've played any golf, but when I think I've actually succeeded in hitting one or two holes in one on a 3-par hole, and boy, does your spirit soar. I mean, that is just one of the most incredible things. Of course, that's like 1 in 1,000, 1 in 10,000 for me, and I get a lot more. But yeah, it's fascinating. It's kind of an interesting exploration of that feeling of I'm a freaking genius, or I suck. I don't think that I'm unlucky when I hit it into the weeds or into the long grass or whatever. But it's such a powerful human reaction to go, that was all me. And actually, with my children, it's like my son was saying, well, I'm a smart guy, I deserve this. And I'm like, wait, you didn't do anything to get the genes that made you smart. So why do you deserve it? Actually, you own none of it, because what you can own is through your hard work and application. But your genes created the mind that you have. So it's actually, in a way, not yours, And so, yeah, I mean, look, I think that replaying, imagine 1,000 different replays of Guy Spier, Aquamarine Fund 26 years or whatever else, and trying to understand what that distribution looks like and how you might change it is a powerful way of looking at the world that really was switched on to me by Ole Peters, this guy from Ergodicity Economics, and Luca Delana. It's a really, really smart way to think of the world. And I think that, as we get more successful, then we want to run our lives. And I guess I said this in my annual letter, which is where you're picking it up from, where all of those 1,000 different, the distribution of those 1,000 different reruns are all satisfactory. I'm willing to give up the long tail on the upside, the possibility of becoming a billionaire or whatever, in order to avoid the worst outcomes on the downside. That's for sure. And I think we all ought to be able to do that. And thinking in the same way, if I just go back to your previous question, nobody's telling you what myth to have, but be aware of the mythological dimension of what you're doing. So in this case, nobody's telling me what risk to take or not to take, or anybody else for that matter. But be aware not just of your evaluation of the risk for the particular life path that you're on, but imagine 1,000 different life paths and think about how it plays out in each of those, because you don't actually know which one you're on. And you need to be okay in all of them. Seems to me to be a very, very powerful model to think about the world.
I think you're very right, and there certainly is a very diminishing return to utility whenever it comes to money. You probably want to optimize a lot more for the first dollar than the last dollar.
Yeah. Somebody wrote, the first million is always the most difficult. And once you've got it, you don't want to do it a second time.
Well said.
Yeah.
Well said. Charlie Munger has emphasized the importance of a dollar-weighted track record, and I almost feel a bit guilty asking this question, especially now. Also, whenever you just brought up that perhaps over the past few years, the performance hasn't been as you wanted it to be. whenever you look at asset under management, there's something to be said about that as well. But which is for good reason is going up on your end. But do you think dollar weighted track records are the right way to look at it, and how would that change your returns?
So just to be clear, so in Aker Marine Fund's portfolio, it's clearly dollar weighted. It's that my returns are in proportion to the actual dollars invested in various different investments. I guess what you're suggesting is that one should say, no, what I want to do is just take my top 20 stock picks and just do the average of those and the returns of the averages of those. And I think that I agree with Charlie Munger. I find that complete anathema because doesn't measure anything real. Unless I actually was equally weighted in each one of the different picks, and if I guess that would have required a constant rebalancing, which was possible if I actually chose to do that. Then yeah, I measure my dollar weighted, but then the dollar weighted and the average actually would equal each other. I mean, I think that the decision to be in cash, not to be in cash, the decision of how much one allocates. I mean, the famous statement by George Soros, it's not if you're right or if you're wrong, it's how much you bet when you're right and how much you bet when you're wrong. I mean, it has to be dollar average because otherwise you're not actually measuring what the person actually did. And a key part of being a successful investor is committing big bucks to juicy opportunities. Doesn't seem to me that one should get any reward for saying, look, me and Duff and Phelps is the example you wrote, and for the reader's interest, it was something that went up 7 times in the 2 or 3 years that I owned it before it was sold. It was a very successful investment, but I invested far too little in it relative to what I ought to have invested in it. And I don't get any credit. I shouldn't get any more credit. I get credit for finding it and investing in it, but I shouldn't get any more credit for the fact that I didn't put a huge proportion of my portfolio into that. Seems to me to be just a very important part in it. And it's really, really hard. And of course, we have all this hindsight, So at the time, I didn't feel like that was the right thing to do. And I think that, and I appreciate you bringing it up. It's really, really important for anybody listening to this, whether you're an individual investor, whether you have friends and family money, or whether you have large pools of money. I was investing at that time for my father and 1 or 2 business partners of his. They came from the agricultural chemicals industry. They understood very little about finance. They barely knew what a stock or a bond was. And it was just so well, Guy Spier's investing for us. And I had to take into account that they were my investors. And I had to take into account that a large drawdown in the first 3 or 4 years would potentially jeopardize my career and my little business that I was starting. I couldn't assume that they were sophisticated investors. And so that was part of my story. And that drove my decision to be extraordinarily conservative in my commitments to equities. So the vast majority of the portfolio was in laddered bonds. And I think that that's just part of my story. And we're kind of dumb if we don't pay attention to that. One of the things that comes up all the time when we see people making investment moves is that the investment move is taken out of context from that person's financial background, and you just can't do it. You have to take into account all these things that are hidden from you when you look at whatever move it was. So, and in my case, for some reason, I early enough, even before I'd met Monish Pabrai, and even before I'd read these books like Power versus Force and the Mahatma Gandhi autobiography, I wanted to be truthful and honest. And that was more important to me than trying to present myself in the best possible light, if you like. And, a thought comes up for me, which I hope is not a kind of a rabbit hole, but I'm going to say it now. I would have maybe found an opportunity to say it later. If you're living a boring life, or then you're probably not telling the truth. And this beautiful phrase by Jordan Peterson, if you want an adventure, tell the truth. And when we tell the truth, that's where everything starts. Everything starts when we start telling the truth. The truth is often extremely painful, and we don't want to own up to it, and we don't want to see it because we'd rather stick our heads in the sand. I'd tell you a few people that I think in the political world that we are in today are kind of truth tellers. John Elkann has talked about this. He's talked about finding truth tellers in organizations, people who are willing to speak the truth as they see it without regard to the consequences. I think Jordan Peterson was one of those people. He could have kept his head down as a Canadian academic and not told the truth of what he saw around him, or he could have had the courage, which he did have, to point out what he saw, and it eventually got him fired from the university he was teaching at. But he's on an adventure, an incredible adventure. And another guy that I've been tuned into recently is somebody called Gad Saad, who's written a book called The Parasitic Mind. And he's actually an evolutionary psychologist. He's got some other books that I really want to read about, the evolutionary basis of marketing within an understanding of our evolutionary psychology. But he's got a book out called The Parasitic Mind. And he's talking some very, very unpleasant truths in the Canadian environment. And he's got the courage to say it. But it actually starts with, me having the courage to say, wow, you have an issue. It's called ADHD. So start understanding it yourself. And then even better, to start talking about it to the world, or somebody who says, wow, I have a problem with alcohol. I need to pay attention to that. Or, wow, I'm arguing with my wife a lot. I need to pay attention to that. Or, and to, wow, I've outperformed the S&P by this minuscule sliver, and I really wish I had better performance. That's also being honest and truthful. So, and then the adventure begins.
And it's no easy task. I can easily understand if someone is listening and saying, well, 9.3, 8.7 performance compared to the SP 500, it's not that much. It's hard. Like 26 years is a long time. And I sort of like wanted to use that as a segue into my next question about, and again, my disclaimer will be, I'm not really out here to offend anyone. It's really one of those, to your point about start by telling the truth to go on a beautiful journey. Have you considered, if you stop beating the S&P 500, because I have no reason that you won't continue. I have no reason to believe that you won't continue doing so. But have you considered then say, like, hey, it's just like being an athlete. You used to score, I don't know how many points per game. Now you don't do it anymore. So it's better
Yeah.
for everyone that you stop. Have you thought about that in the context of being an asset manager?
The first time when that question came up for me was when I'd written my book and I'd been invited by Sarab Madan to give a talk at Google, Authors at Google. I was super nervous and excited. I went and gave my talk, and Google full of very smart engineers. An engineer says, "Look, your results that you've put up show that you've outperformed the S&P. How do you know that it's not luck? And how do you know that it'll continue?" And the honest answer which I gave was, I don't know that it's not luck. It could be luck. How on earth should I know? I'm one individual. We don't have enough data points. In a way, we'll never have enough data points. And so that's something that, and of course, the stress and the pressure that somebody in those shoes may well find themselves in is that, what if it's actually luck? And what if actually my destiny is going to turn around next year, and if I outperformed for the last 5 years, I'm now going to underperform for the next 5 years or 10 years or however long it is. So if you take the particular provenance of Aquamarine Fund with this kind of like investment from friends and family, I take the hit at the beginning that I had a huge amount of cash and I was making very, very tiny investments. But then I also get to take the benefit of the fact that I have performed, I think, a very, very powerful role, or a transformation role, I would argue, in my own family, in that the single decision effectively to move from a fixed income portfolio to an equities portfolio and to get into some of the right equities, but it might have just been the S&P, has been transformational, because the difference in return between bonds and stocks is way more than my 50 or 60 basis points. It's a way, way higher number. And so I kind of come back to saying, I've been a steward of the capital of the people who've entrusted it to me. And especially the first group, none of them had exposure to equities. Suddenly all of them had exposure to equities. And that's turned into a very, very significant nest egg, certainly for my own family, but for a number of other families as well. So I don't know if you saw my most recent letter, and it was really scary for me to say it, but I felt like I had to say it. Um, what if right now, if somebody came to me, if God were to say to me and say, Guy, in order to outperform significantly, you're going to have to massively change your strategy and you're going to have to do all these different things. Would I do it? I kind of said, actually, I wouldn't, because I don't want to do things I don't understand. I don't want to do things that are not within the grain of my personality. That would be well, first of all, I don't think it's likely to work out. It would be likely to work out if I were to take such a hypothetical decision. And I also wouldn't sleep very well, and I wouldn't be a congruent person in the world. I wouldn't be aligned. So I kind of came to the conclusion that I need to do what I believe is right for my investors as a steward of their capital. That's the most important thing for me. Even if somebody's yelling at me who's knowledgeable is saying, well, if you do that, you'll underperform. I cannot give that up in order to lunge for some kind of outperformance. So being a trusted steward of my investors' capital and acting in a way that is consistent with my personality and my best understanding of what I should be doing with my investors' capital is more important than outperforming. And yes, I would like to outperform, but if I have to choose between the two, I'll choose that, because in a way, if I behave that way of those 1,000 replays, I'm going to have satisfactory outcomes in both. And even if some genius who sees the future is yelling at me, no, Guy, but if you follow the strategy, in all 1,000 versions of the way the world unfolds, you'll outperform in all of them. It's no good, because I need to know that and I need to be comfortable with that, not them. So that's a long way of saying that I'm willing to be truthful and honest about the possibility that I may underperform, and that may be the story of the rest of my investing career. And my job is to be honest about that. And I'm in the extraordinarily fortunate and lucky position that if that is the outcome, I'm still okay in my life. I'm still okay doing what I'm doing, if you like. I will still have been a good steward of that family nest egg, because I'll still be way outperforming what we would have had if we would have been in some kind of fixed income securities. I would also add to you that this came up to me. So when you understand this, anybody who's been to the Berkshire Hathaway meeting understands this very well. We all know, those of us who are kind of like the diehard faithful, that the Berkshire Hathaway meeting is about so much more than just figuring out how to become better investors. We become better humans and we live better lives as a result. I think that, people say, well, you could have just avoided all this effort pretty much and invested in the S&P. And my answer to them is, the S&P is a pretty impersonal thing. And I'm not sure that if I hadn't been invested in the S&P, if I would have stayed in equities, So we have to be aware that what we invest in and the decisions we make then have an influence back on ourselves. So I understand that there are many people who won't want to invest with me. And I get emails and letters all the time. And people say, hey, Guy, I've reviewed your fund and it all looks good, but I'm not going to send you my money for like that meager outperformance. I think I can do better. And that is, I mean, yeah, would I love it if I know people, somebody I know who's got a significant investment from the Graham family that used to run the Washington Post. Would I love to have those people look me up and say, oh, we need to be invested with Guy Spier? Of course I would. But the honesty and the good steward of capital in a congruent and consistent way is far more important than lunging for that stuff. I think that, obviously I spend a lot of time talking to Monish Pabrai. He's a very, very different mental makeup to me. I think that what's key there is that I know that on some level I'm tapping into the core of who I am by saying that. Monish Pabrai could not say those words. He's a very, very different person. with a very, very different experience of the world and of his reality. And so I think that actually his behavior or his makeup is far more consistent with the possibility of having very, very significant outperformance. But it comes at this cost of the tail on the downside. The evaluation of the downside risk in a portfolio that Monish runs would be different in my case. I would see it differently to the way he sees it, but that's why he and I are different. So, yeah, am I answering the question,
I think you are. Yes, Guy, you definitely
or
are.
am I just waffling?
Can I say both? Is that rude? No. just
Yeah, I hope I'm not
just
waffling.
joking. I should just say for full disclaimers that all the to be aligned, sort of like go back to what you're saying, that I have an investment with Magnus. We didn't plan to speak about Magnus, but now that we are talking about it on the show, I think it's only fair to mention that. Now I've discussed track records with many asset managers, and some of them underperform the benchmark, and whenever they do, they would typically tell me that's because they take less risk. And I have no reason to believe that any of those asset managers are lying or insincere by any means whenever they say they take less risk. That's not my point at all. And if I can just come up with a generic example, so I'll be meeting up with investors who say, "Look, I have gold in my portfolio, and because I have gold in my portfolio, I take less risk." And then I would meet up with another asset manager who would say, "I do not have gold in my portfolio, so that's why I have lower risk." And so, and such is the irony of business and life. And it's sort of like whenever I speak with asset managers, it's a bit like asking your friends if they're above average drivers. It's like we
Yeah,
all are better than average, right? And everyone we know are better than average.
I thought that was a great analogy that you put there. Nobody's made that before. And I just want to pause on that before you actually ask the question, because I think it's worth it if you haven't said it before. So we all know everybody thinks they're above average driver, and there are many tests that show that. And, and if you think that Stig and I are immune to that, we're not. We also feel like we're above average drivers. And so why would that not apply in the world of investing? Every investor, especially those who are professional investors, think they're above average investors. Yeah.
Yeah, I just want to make one slight correction. I am definitely below average driver. I never own a car, so but I think you're generally right, and I think the investing industry is very much prone to that. It's mainly men who've done well and probably have gotten good grades, nice degrees, and have been used to success to some extent. Perhaps there are a lot of them have been doing competitive sports and whatnot. And I think that I see that in all walks of life that we all think we're better than average. But I would say most definitely in the world of investing, there are a lot of people who feel that they're better than average, which is probably also why we come up with this. I'm going to say myth here to go back to Joseph Campbell, but this myth that, well, if we have a track record where we're not beating the S&P 500 and we still live by this myth that we're better than average, it must be because we have lower than average risk.
Ability, IQ. Oh, I see.
Right. Like, so then we sort of
Right.
like, then we have the confirmation bias and we fit
Yeah.
different information into that. But my question that I want you to pose is really that you're obviously you have a very good track record. You survived for more than 26 years, which is not an easy task. But how do you think about whether you take, I'm just going to say above average, and then we can talk about what average is. How do you
Right.
think about taking above or below average risk in your portfolio?
Yeah. And what is risk? And we can all say, I think that most of the world, the people in the world that we live in, understand that sort of Myron Scholl's capital asset pricing model, risk is approximated by variance, is we can throw that out the window. But for what it's worth, the reason why Myron and Scholes picked that, I wasn't in the room when they picked it, but they needed something that was scientifically objective or objective, period. And what they were able to do was so. I think that they wouldn't say that that is a good approximation of risk. They'd say we need an approximation of risk. We need an approximation of risk that we can all agree upon, and that nobody's going to argue with us on. And that everybody can measure the variance of an asset, or the price variance of an asset. So that was why they did it. They were not saying that it was great. They've since been dumped upon by all these fundamental investors who say that's just not a measure of risk. But once you get beyond that, finding something that you and I agree is the same in terms of risk is extraordinarily difficult. And I don't have any good answers. I think that Myron Scholes and I can't remember the other guy, they struggled with a really difficult question. How do we get an objective measure, an objective understanding? I don't think that there is one. We're all trying to take less risk in our portfolio relative to the returns that we expect to get. And once we move away from a very, very imperfect measure, who's to decide what is more risk and what is less risk? I really genuinely believe that I didn't have much risk in my horsehead position until it blew up on me, and then I realized how much risk I had, And there's a, and there's an argument, people will look at me and I will say, I mean, a fascinating one is Berkshire Hathaway, which many listeners here will understand extremely well. People say, well, how can you have such a concentrated position in that very, very big company? And that is a huge risk. And I will say to them, well, if you study the businesses and you understand what's going on inside the organization, then you'll realize that it's perhaps the least risky position in my portfolio. And they just cannot see it. They cannot see it. And so how do you have a conversation about that? Myron Scholes would say, let's just look at the variance. and that's not a very good measure. And then you can just agree to disagree and say, and I'll talk about things like, I want to believe that the business that I'm invested in would survive, the apocalypse or, an asteroid hitting the Earth or some major, major event. But how do I actually know? I kind of say, well, I think Coca-Cola will survive on the other side of such a major event. Do I really know? I don't really know, and it's like these things are such one-off things. Actually, a name that comes to mind is just an incredible guy. His name is Richard Zeckhauser, and he's a very famous, I don't know if he's famous, but he's a very, very good bridge player, a world-class bridge player. But he gives a course, or used to give a course at Harvard on investing. And he's got this article called Investing in the Unknown and Unknowable. And, and what do you do when there are no data and there's no way to evaluate? He first of all makes the distinction between risk and uncertainty. So, the uncertain, you can have a variance, you can have an asset where you can measure what its variance is and the way in which it moves around. And so you can say, well, this asset's moving around in this way, and it's within relatively well-defined, government bonds would be an example of that, of AAA rated countries. And then you have what's going to turn out in the world after 9/11, and 2 planes have hit the World Trade Towers, and it's the day after, and you've got no data. And that is complete unknown and unknowable, if you like. You have no prior data, you have no prior experience. This is a new event, and what do you do? But then, and now I'm being rambly. I'm not sure why was that important to me, because we just, risk is subjective, and we only discover afterwards what it actually was. And then what I would also add is 2 thoughts that come to my mind on taking risk. I actually think that I've been extremely suboptimal in terms of taking risks. So first of all, when you're in your 20s, you should take a lot of risks, not with your life, but career risks, financial risks, because you have lots of time to recover from them. So it is suboptimal when you are young not to go to work for that startup, not to invest in that speculative stock. Because when you take a risk and it works out, you win. And when it doesn't work out, there's an enormous learning opportunity. And obviously, if you're and I think that Monish does in many ways run his portfolio in this way, if you are diversified in as few as 10, sort of like very asymmetric outcome type things, unknown and unknowable, but huge payoffs if it works out. I guess I'm describing heads I win, tails I don't lose much. If you have 10 of those, you should do all right, even though you'll have a pretty high error rate. And so maybe when you're young, not taking a risk is in a way the biggest risk of all. And so I've actually exhorted younger people in their 20s, like, you must take risks. You'll regret it. Don't be the guy who doesn't take risks till he's 40 and then starts taking risks when he can't recover from them. So that's a long way of saying, I really don't know if just to go back to your question, the investor says, yeah, but I've taken less risk in my portfolio. And then they'll maybe come with calculations like variance or Sortino ratio or drawdowns and there's no real way of deciding whether that's the case or not.
So,
Can you believe that was such a long non-answer answer?
but that's because it's so complex. I don't, if you ask Warren Buffett, he's going to say, risk is opportunity cost and permanent loss of capital. But then you also
Yeah.
have to ask, and then what? There and then there's so many other things to unpack whenever you think of that. And I think it's so important also to understand where the other person is coming from. So we talk about when it's pariah, for example, and having 10 bets, which I think to some probably seems very risky, and perhaps not so much to others. I actually tried talk him into having a fund just with 3 bets, just with 3 stocks,
Yeah.
because I felt like 10 stocks were way too diversified. But then you're sort of like, it adds a lot of complexities because you want to make sure that the asset manager that you potentially invest with eats his own cooking, right? And so one way to do that is you want to make sure that they put all of their own money into it.
Yeah.
But then we as investors, so for example, for investors investing in your fund, like I think it's very noble and it's the right thing that you have, the vast majority of your wealth in that fund. Now, me as an outside investor, if I were to invest, like I have the privilege of saying, I want, this investor's best idea and the other investor's best idea and Guy's best idea. And then I'll construct my own 10, 15, 20 stocks, which is why, I cheekily ask Manish, could you just set up a fund with like 3 stocks? Because if I feel like 10 positions or 3 positions are too few, I can just put in 3% of my portfolio or 8 or whatever I feel comfortable with. But then at the same time, I want them to put all their own money in their own fund, and I can easily understand why would they put all their money into 3 different stocks?
Yeah.
And so, so that was just one thought.
Hey guys, it's Clay Fink here, host of We Study Billionaires. If you're like me and enjoy listening to podcasts, then you'd probably enjoy listening to audiobooks as well. Whether it's when I'm doing the dishes, going on a walk, or driving to the gym, audiobooks are such a great way to continue on this journey of lifelong learning. And if you haven't signed up for Audible yet and you'd like to support We Study Billionaires, I'd encourage you to use our affiliate link and start accelerating your learning journey today. Also, if you haven't read my co-host William Green's wonderful book, Richer, Wiser, Happier, I'd encourage you to start with that one. Immediately after you sign up for your Audible subscription, you can start listening to William's book for free. Some of my other favorite investing books include 100 Baggers by Chris Mayer, The Joys of Compounding by Gautam Baid, and Same as Ever by Morgan Housel, all of which have been previous guests on the podcast. To sign up for Audible and to support We Study Billionaires, you can head to theinvestorspodcast.com/audible. That is theinvestorspodcast.com/audible. We appreciate you supporting We Study Billionaires.
Apropos of that, around 2006, I was approached by an American institution, and they were sort of following that strategy. And they said, "Look, we don't want to invest in your fund. We're going to take your 2 best ideas, and we'll reward you for the way they perform." And it was, the relationship ended during the financial crisis, and they didn't lose much money. I don't think they lost any money. There were 2 positions. One was a gain, one was a loss. And I sent the money back to them. It was kind of like separately managed account. And their compensation, they kind of said, "Look, we want to compensate you on each position." So in theory, I could have gotten compensation on the position that was up. And I kind of just said, what did I learn? Exactly to your point, I just couldn't manage those positions in the same way as I did when it was all inside one portfolio. And I realized it became really important to me to just manage one portfolio. And actually at that time, I had been managing an onshore and an offshore partnership in 2 separate vehicles. And it became imperative to me to create this kind of master feeder structure where it was just one account that we were managing, and all of the investment was in that account. And around that time, one of my investors, a lovely, lovely guy who was in the same building as me in Carnegie Hall Tower, he said the same thing. He said, "Look, Guy, I love the way you find these things. I love all of those, and I totally get why for family, thousand different lifelines being okay in all of them. You also have these positions in places like Berkshire Hathaway, American Express." He said, "I just want your best ideas. I don't want those kind of like, whatever you want to call them, core positions. And if I can't get that, then I will redeem my investment." And he kind of was encouraging me to either take my family money, if you like, out of the fund and invest it separately, or to create a separate fund. And again, I just didn't want the brain damage and the headache, and realized at the time that that would give me a different life path, because there would be many investors who choose not to do it. I think that, what comes up for me as you say that is, it's more important to be authentic and true. Forgive me for citing Shakespeare, Laertes and Hamlet, to thine own self be true, is more important than saying, yeah, but actually, let's just optimize for XYZ marketability and returns. Because if you give up being true to yourself, in a way, it's the loss of happiness. It's the loss of one's place in the world, because you're no longer you. So I think just to, and that goes to so many, that goes to so many life decisions. And just going back to, if somebody were to lay out for me what I had to do to beat the market by 20 percentage points, let's say. But in order to do that, I would stop being Guy Spier. I'd be some distorted version of myself. I'm reasonably sure, I think I'm 100% sure that that's not worth it. And what's really, really important, I've said this, a really, really important takeaway for me from the launch with Warren Buffett is that he actually is that person. The person who's this incredible investor, he's not trying to be anything different to who he is. He's not waking up saying, I need to take more risk, or I need to take less risk, or I really regret, the relationship with my father because I held too much, or the way the relationship with my father resulted that I ended up holding too much cash. He doesn't, the person he is actually optimized for investing. He didn't have to try to make himself that way. And it was a huge revelation to me, because I was like, wow, stop trying to optimize yourself for something that for who you think you want to be, and become who you're destined to become, and let that be your adventure, if you like. So if we're living in a facade, if we're living in a projection of who we want to be, then we've actually given up our own autonomy. We've given up the most precious thing, which is actually what was written on your birthday card. What is a cosmic privilege is to be the person that you are. What is it? Remind me on the birthday card. It's Joseph Campbell.
Right here.
Yeah.
The privilege of a lifetime is being who you are.
Right, exactly. So that's something we can never, we ought to never give up, and no matter what returns you could get. And actually, it's a decision, a realization that I came to a long time ago, and I guess I'm just saying the same thing. I just remember a good friend of mine saying, but Guy, aren't you trying to be the best investor in the universe? And forgive me, because I've said it so many times. I was like, no, I'm trying to be the best version of myself. And if that turns out, the best version of myself turns out to be an incredible investor, one of the best investors on the planet, then I'll celebrate and I'll be grateful for it. And if I'm not, then that's also okay. There'll be other things that will be good for me. So, it's scary. It requires courage. And I don't think, in comparison to many people I know, I don't think I have that much courage. I actually don't need that much of it to say, I have to give up on what I'd like my destiny to be in order to find out what my destiny actually is. And just to go back to kind of like what you're kind of sort of talking around with this investing and, saying, oh yeah, but my risk-adjusted returns are actually really, really good. The myth the myth that those people are living by is somehow, if I turn out to be the world's greatest investor, or a very, very good investor with a very good track record, therefore I'm a good person, therefore my life on this planet is justified, therefore I deserve the respect and adulation of people in society around me. So they desperately want to be that person. And the minute you say, well, actually, the only person who needs and deserves my respect is me, and that requires me to be true to myself. And yes, it would be nice to be a billionaire. It would be nice to have the best track record. It would be nice to go into the pantheon of the gods of investing there with Warren Buffett and Charlie Munger and others of being the world's greatest investor. But I can't force that, and I have to become who I'm going to become. That's not the most important thing. So what those investors really ought to do is realize that they have this myth that they're trying to live by, this myth that, all those things that I just said, and that's actually not the real scorecard. That's not the real measure of a life. It comes up to me, Clayton Christensen, how will you measure your life? Am I going to really measure my life by a number of the return that I had in my portfolio? I don't think that's a good. Warren Buffett, he could have been the richest man on the planet, but he's giving money away. He realizes that's not the right measure of his life.
Guy, I had the privilege of speaking with a mutual friend of ours, Thomas Müller Borgia, here a few days ago, and I hope he'll forgive me for saying this here in public. But he asked me a question about investing, and he asked me about how I thought about investing yourself first and then find an asset manager, or do it the other way, like how I was thinking about that dynamic. And I said to him that I felt it was really important to start investing yourself first, because you don't know what kind of investor you are before you invested yourself and before you felt the pain. But also before you invest and figure out which kind of investor you are, it's really difficult to find an asset manager you want to team up with. And you really have to understand where that asset manager is coming from, just like you need to understand where you're coming from. So in this case, where I'm, for example, invested with money, it's not that big part of my portfolio, but I'm doing it because it's an insurance against my own ignorance. Like, I can look at my track record and say, oh my God, how smart I am or whatnot. But I also have to factor in, let's do this 1,000 times. How would this go 1,000 times? Can I find someone who I feel would do better than me over, say, 1,000 times, and then just take a part of that portfolio? And I think that the intention is not to talk too much about money here on this call, but like understanding where's that other person coming from and where you're coming from. And so I don't necessarily think I'm the typical investor. Whenever I'm looking at, I interview 500 asset managers, whatever I have, and go in and figure out, okay, so this, and how does that work with that? And that's ready. That's not how most people invest, and probably luckily so. Why is it that my parents ask me what they should invest in? That's not because I'm the greatest investor. It's because they trust me, and they don't really know too many other people who know how to invest. And so it's also important to understand what kind of investor would like to invest in your fund. And if the typical investor in your fund is, we're a family office, we only trust Guy, we want Guy to invest 90% of our net worth, then that strategy is quite different than, sorry to bring myself up here, like, oh, I'm going to take this and put into, I don't know, Moneys' fund and this into Bitcoin or gold, or like, it's a very, very different attitude. So whenever you talk about like who is a great manager and who's not a great manager, it very much depends on what is your goal, what is it that you want to achieve. And it's complicated to have that discussion, because you really need to understand where this person is coming from. So I can't speak for you, and I'm sort of trying to do it anyway, so please forgive me. Like, if you were to invest with Guy, you should probably start by, reading The Education of Value Invest, and then all of his letters to understand where he's coming from, perhaps even have a conversation with you.
I mean, I think that what comes up for me as you say that is that I don't feel like it's talked about as much, but I think it's a really important part of the decision of any investment decision is that you're creating your environment, and it's strange because these are just bits of paper. It's just an entry in your bank statement, but somehow it creates the environment in which you live. And what I get from the way you're talking is that there's a spice or something that having Mohnish Pabrai in your portfolio brings you that actually helps you in some way to live better, think more clearly, make better decisions. And I think that that's probably idiosyncratic for many people. So I think that I have a number of investors who they're actually they have high variance in their lives for various different reasons, and they want to have a bit of low variance. Now, they could also do it through owning government bonds, or they could do it through maybe owning the S&P or Berkshire Hathaway. But for one reason or another, it suits them, say, to have me with my personality there. So they have an investment with me because they want that kind of whatever that brings, and that is extraordinarily idiosyncratic to that particular individual. And I think that what I think is important to understand is, we talked about the symbolic dimension, we've talked about the mythological dimension. So there's the analysis of, is this a cheap or expensive company? What is the moat? Is it growing? Is it not growing? All of those things. And then there's do I want to be in a relationship with the group of people who control and run that company? Are these people I want more of in my life or not? They could be extremely good investments that work out extraordinarily well. But you don't actually want a relationship with the people that are the group of people who are running it, the CEO and the people who control that situation. And by contrast, they can be less good investments in terms of pure numbers because they're not cheap, because they don't have an expected IRR that is great. But there's something really special about that group of people that brings you something in your life. And it doesn't necessarily just have to be that you attend Mohnish's annual partnership meeting. It could be just reading those letters, having, thinking, well, 10% of my portfolio, whatever it is with Mohnish, therefore, what would Mohnish do in this situation? So understanding that is also an element of why we're making the decisions that we're making is really, really important. Give one example. I was shaving today. I was actually shaving in preparation for this. I decided I wanted a clean face. I often show up. So I'm using a Gillette razor, of course. And I'm thinking of Warren Buffett and his investment in Gillette. And I just remember him saying, well, it's a good feeling to know that X million people are going to wake up today and there's going to be an extra little bit of hair on their faces that they're going to get off. And, some of them are going to use Gillette razors. And if you would have come to Warren and said, Warren, I can show you an investment that's going to earn you 2% better, but it's in not even like some technology thing that Warren doesn't understand, but a product that Warren doesn't like and use himself, let's say. Should Warren have taken that investment? I don't know what he would have done, but I think there is an element in Warren's investing, which is, he has a relation, that the way that furnishes your life. And it came up with Bank of America, although he's been selling it down a lot, where he said, I just like the people. He likes Brian Moynihan. He just said it straight. I like Brian. So furnishing that and having those idiosyncratic reasons. And in your case, what I would want to say is, I think there's a lot more to your investment with Mohnish Pabrai than just buying insurance. And I think that it's interesting to explore that. So that's one really interesting area to discuss, and will make us better investors. If you own the S&P, you'll get that return, but only if you continue to own it. Maybe the S&P is so impersonal that market wiggles and various other things will convince you to leave the S&P, whereas another investment has a slightly lower return. You will stay with it, and that actually will outweigh the outperformance of the S&P. That's an interesting thing. Another place where I'd go, which is really fascinating for me, because there's, it was really brought home to me, but I'm not going to mention the name because I'm not sure that they'd be happy with it. In conversation with the investment team of an extraordinarily famous investor, and we had a summer intern here. I think it's okay to mention his name, a guy called Aaron Zess, former McKinsey guy, in between his first and second year at business school, did incredible work for us. And we did this presentation, and one of the analysts, he was like, that's just such top-down garbage. I could say the company, we did a presentation on BYD, and he said, you people don't get that it's the DNA of the CEO and the management team that is key to this investment. And so I think that this kind of analysis of what does he have in his portfolio, if we're talking about funds, what is returns, what's his Sortino ratio, what's the variance, what's the risk he's taking, what's an objective measure, that's kind of all top down. But then you could go from a different place, which is to say, what is driving this person? What is, in this case, what is Guy Spier's DNA? What does he get up for every day? Why does he get up? Why does he make the decisions that he do? What is he really driving for in life? And is that something I want to have? Am I aligned with that in any way or not? I would tell you that so if I observe what I know about Chris Hahn, who was a classmate of mine at business school, the drive that Chris Hahn has to generate returns for his investors is something that is just extraordinary to watch from a distance, or to be in the same room with. He's extraordinary drive, extraordinary focus and attention. And do you want to have that? It comes with certain costs as well. Enormous costs in all sorts of ways. We know of investors whose marriages have broken up, all sorts of, maybe they don't have many friends, maybe they have children that are estranged to them. But what is the DNA of this person, and do I want to align with them? I think, to go back to Monish, I think that you maybe not consciously, and I hope you don't mind that I'm coming back to him. You've done quite a bit of thinking about Monish, who he is in the world, what his life story is, and you like that DNA. You want that DNA in your life. You want that decision making. You know that out of that, the way Monish is in the world, sort of like very interesting things will unfold for you and the people around him. And so picking one's investments, whether it's in corporations, i.e. equity investments, or funds, by analyzing the DNA of the people and saying, is this a DNA that I want in my life, I think is also a valuable route of analysis, if you like, a dimension that we should keep in mind.
Yeah, thanks for bringing that up. One very influential book was Andy Duke's book, Thinking in Bets. I think that's such a brilliant book about separating the process and the result. And it's difficult in investing. We've been doing this for more than 10 years, and every investor that we get on the podcast says that they have a margin of safety, or they want to have a good moat. Like, everyone sort of like says the same thing. So if you didn't know anything about their track record, or really had a chance to speak with them in depth, you would be like, it's hard to separate. I guess that's what I'm trying to get at. So you're absolutely right, Guy. Like, I take immensely joy in reading Monish's letters. Ironically, I feel it gives me lower volatility to invest with Monish. And I think most people would be like, "What? Wait, didn't Guy just say he had like 10 stocks?" And they're very tilted, where one position could be significantly more than 10%.
Yeah.
But again, like, I come from this of a place that I'm already sizing going into the investment in the first place. There's an element of being uncorrelated, and then it might sound a bit silly, because I think a lot of investors probably like the idea of being able to redeem all the time. I really like, for example, with Pabrai funds, I can only do that once a year, and I never redeemed. It gives me, I think naturally I have a tendency, coming from the world of poker, I think I have a tendency to almost seek volatility at times. I remember there was a specific time during the COVID crash, and the market dropped like 12%, like S&P 500 or 12%. And it was a bit like, I want more action, which is probably not how you should be thinking about it. And then I was like, no, that's not the right way to think about family wealth. And so for me, sort of like to store away X% of my portfolio into a different fund in as many as 10 picks, like, it gives me some peace of mind. It gives me what I feel is lower volatility. And I have 5 stocks in my portfolio, and only really meaningful positions in 3 of them. So it's a way for me not to put family wealth into 3 stocks.
Right.
And so there are many different aspects of it, for sure.
Yeah. Yeah, it's complicated, and Monish is a very driven guy. You and a very, very unusual wiring that's extremely suited to investing. He's going to do well. I can't guarantee in every single one of the 1,000 different unfoldings of the world that we could have, but in the vast majority of them, he's going to do extraordinarily well. Probably in all of them. Obviously, I don't really know. I don't have full foresight and full hindsight, but and I'm impressed that you're at 5 and you want to go to 3. What I'd also say is just the pure mathematics of, if you own something that compounds a lot in the portfolio, you'll end up having a concentrated portfolio. So what I try to explain to many of my investors is that it's not that I woke up one day and said I want this huge position in Berkshire or American Express or BYD. It's that they went up 10x. And I didn't sell any, and I didn't portfolio rebalance. It creates another difficulty, which is the investor coming in says, "Well, but I'm buying this unbalanced portfolio. I kind of want to start with the balance of each of the 10 positions being the same. I don't want 3 of them to have grown to be outsized positions." And that's just the case. That's the difficulty. I don't know how to answer that without kind of creating other problems that we've already talked about, like creating multiple funds or something like that. So it's an unbalanced portfolio in a way, the same way that when you were buying into Berkshire Hathaway, there was a certain period where at one point American Express was 40% of the NAV, and at another point Apple was a huge proportion of the NAV. So you're also buying into, well, what's fascinating about Berkshire Hathaway is that so many of the Berkshire investments, especially in the private businesses, don't work out at all. But we don't notice them because they just because they're an rounding error in comparison to the ones that have worked out. Like Mid-American Energy or Burlington Northern. I mean, and those. But who's talked about Quick Cut Knives recently, or about the Pampered Chef, or various many businesses that are just like World Book. I'm not sure that World Book's doing all that well, but it's okay. Brown Shoes, whichever it was. Not to mention the original Berkshire Hathaway textile mills. So what's my point? My point is that you can end up with what appears to be a highly concentrated portfolio just because you left it alone and did nothing, basically.
Yeah, well said. And just one more comment before we transition to the next segment of the show here about service is also that, really understanding where that investor is coming from. So, for example, whenever you're listening to Guy, is his family wealth tied into aquamarine, and is it primarily equities? Whereas, for others, they might say they only have a handful of stocks, perhaps a bit more, and then they also have a huge real estate portfolio or whatever. I was about to say have a position in gold because they take less risk than the average. But I don't think I want to paint myself into that corner.
I mean, the amazing thing about gold, I don't understand it particularly well, but there are a certain proportion of investors who, if you just start mentioning, well, different investors, it's something different. For some, it's Bitcoin or crypto, specifically Bitcoin, and they don't want to do it themselves, but they want you to do it for them. So it's in a way, if you want gold bugs to invest with you and you say, oh yeah, we always keep between 10 and 40% of our portfolio in gold, you got a whole bunch of people who don't want to buy the gold themselves and they love the fact that you've got the gold. So I think a very interesting question to ask, and it's not often obvious, is what I'm doing really, this is for the professional investors, is what I'm doing, am I doing it in order to generate returns? Am I doing it in order to gather assets? And the question, and I'm really not sure that I have the answer, and I know that there are some people with gold in their portfolios who'd be quite offended probably by me saying this, so I apologize in advance, but can you really say that you're owning the gold in order to get the best possible, quote, risk-adjusted returns? Or are you doing it because you'll attract a bunch of gold bugs who love the fact that you own gold at all times? And it gives you something to talk about. It's like gold went up, gold went down, gold this, gold that, gold mine. And that also helps you if the gold bugs love talking about it. So it's not just a shiny object that they like looking at. They like to talk about it. They like to talk about the end of currencies and the end of the world and that everything's going to go to hell in a handbasket. But look, we've got our gold, So, and it's fascinating because I know Stig, and I don't know the full story, but I know that you guys have had to straddle these divides between people who either hate an asset or love an asset. And it seems that especially with gold, there are people, the world divides into people who love the asset. I've got a very, very good friend here who showed me photographs of the gold bars in his segregated safe somewhere underground in Zurich. And, so that, it's not like people who love it and people who just can't stand it. And that's true for gold. It's true for crypto. And it's just like, it's almost like it's impossible to try and have a common language because they see the world so differently. That's what makes the market.
That's what makes the market. And Guy, let's talk about a common language here. Because I wanted to transition into the next segment here of the show about service, and specifically I want to talk about VALUEx.
Yeah.
So it's a nonprofit value investing conference, and I'm not explaining it to you because you were the one who founded it in 2011. So my first question would be, perhaps in the spirit of common language, without sort of like giving you too much of a primer, but why did you start VALUEx back in 2011?
It's a great question, and I what I think is fun to try and do, and I hope this is the best way to answer it, is I can easily give the surface level reason, but there may be deeper reasons which are kind of like worth exploring. At least, if I don't do it with you, Stig, I'd have to do it with the psychotherapist. I don't have a psychotherapist currently, but so the surface reason is I wanted to move to Zurich, decided that was the right place for me. We moved with my family to Zurich, but all of my network was centered around New York and perhaps a little bit London, which are the two places UK places where I'd studied. And I remember talking to John Miljevic, who's the author of the Manual of Ideas, and saying he'd moved to Zurich a year after me, and I kind of like said, what if we could bring some of these investors? We used to meet at this dinner in a restaurant called Kolbej, organized by Shai Dardashti. There'd be 20 or 30 of us, all budding value investors. And I said, what if we could recreate that here in Zurich? And I remember I said to John, look, let's try it. And hey, if all that happens is that you and I are hanging out talking stocks in Klosters, the ski resort not far from Zurich, then that's totally fine. So that was the surface level reason: bring people to Zurich. But around that time, I was also, I guess, fascinated by the creation of communities that help you to succeed in life. And Napoleon Hill talks about, he has a name for it, basically a forum, a group of people that helps you to succeed. And Benjamin Franklin talks about having a group of people that you meet with regularly that kind of like help you to think through your problems in life and help you to kind of connect up to what you need in order to succeed in life. So I was fascinated by that. I was fascinated by organizations like, so here in, I'd not long before become a member of this organization called YPO, Young Presidents Organization, that has forums. I'd attended the TED conference for the first time, and I'd seen what TED had done, and I'd attended a TEDx, which is a mini TED conference. So TED, Technology, Entertainment, Design, TEDx, mini TED. I'd been a member of Toastmasters for a while in New York City. I was a member of a chapter called PACES, Toastmasters. And here in Zurich, or here in Switzerland, there was the World Economic Forum. And I found all those organizations fascinating. They were all not-for-profit, all kind of community peer group, but very special communities. And so there was some part of me that wanted to explore that for myself, I guess. So that's kind of like the deeper reason of creating VALUEx. But I think that looking back and thinking about it now, it was about creating something that would help me and the other people who participated in it to succeed, to live better lives, as a vehicle to help me to do that. And yeah, so those are the reasons why. And it's been a fun and incredible journey, actually. Really, really fun and incredible journey. I mean, when we talk about you and your question, ValueX Middle East is ValueX that happens in Dubai. And actually the person who runs that, who's PV Ramanathan, he is the guy who sat down with me in New York and he said, you should join Toastmasters. I think you'd get a lot of benefit out of it. That was like 15 years ago or more, maybe. And I was like, you know what? If that guy tells me I should join Toastmasters, who am I to second guess him? I'm going to just go see what it's all about. And it was a fantastic journey for me. I learned so much at Toastmasters. But ValueX now, there's ValueX clusters, which I'd say is the original one. And people came to me and said, "Hey, I really like this format. Do you mind if I use the name?" And I was like, "Sure, go ahead." So the first one I think was Vitaly Katzel-Nelson set up ValueX Veil, and then Ram did ValueX Middle East, and then there's a character called Sophocleus, and he calls it Value Cyprus, and I've kind of like have fun with him because I'm like, why don't you just call it ValueX Cyprus? And he's like, no, it's Value Cyprus. And then you're not part of the family, Sophocles. I haven't actually been to ValueX Cyprus yet. And there is a guy who did ValueX Kazakhstan a couple of times. And so it seems like the format is a good one. It's one that works. And so, we've grown. I didn't want it to grow. We were originally 30 people. It's now as large as 120, which is in a way too many, but it's kind of hard because you don't want to exclude people. Once you're a member of the community, you're a member. There's security. You want to be in a community where when people who are way better than you join, you don't get kicked out. You get to enjoy their company. And so we're now 120 people, and happens once a year in Costas in a ski resort. And you've been. You know what it's all about.
Yeah. Thank you for inviting me, Guy. It was like you mentioned, like 120-ish people, and it was in the arena, so the biggest venue in Clusters. So it's right next to Davos. Would you consider, like, assuming that it continues to grow, would you move the event? Would it always be in that area? How do you think about that?
Yeah, with difficulty, meaning that the tough choices, and I can just share with you some of the thinking around that. So I'll tell you that if you go to the website, you'll see it, but I kind of drew on what I thought the ideas that most resonated for me from those different organizations that I've described. So from TED, I sort of drew this idea of short talks. And rather than the TED motto at the time was ideas worth sharing, I was like investment ideas worth sharing. And drawing from Davos, the World Economic Forum in Davos, this idea of putting the group in the mountains in the middle of nowhere, effectively, not too far away from an international airport, but far away enough that people aren't kind of distracted by other things. And from YPO, I took these ideas of confidentiality and speaking from experience and non-solicitation, so you can't go there and sort of like market your wares. And so that it's got a kind of a format to it. But then last year, for the first time, I went to something called Tulipomania, organized by Chris Bloomstrand. I think Chris Bloomstrand, I don't know if you've met him, Stig, just a wonderful, wonderful guy. And yeah, John Miljevic introduced me to him at the Zurich project. I was so grateful. John sat me next to him. And the guy is a genius, or more of a genius than I am, for sure. I can't measure whether he's a genius or not. I just know he's got way more brain power than I do. But he had something in his Tulipomania that I think is really, really powerful, that you can't really do with more than 30 or 40 people in a room, which is, the way Chris described it, bring us your worst idea. Don't bring us your best idea. And what Chris described to me is, he meant bring to the group the idea that you most struggle with, that is giving you the most difficulty, that you're just trying to work it out. And then rather than, our talks at ValueX are very short. And the idea is you do the talk, 2 or 3 questions, and then take it to the bar afterwards. Instead, this is 1 hour seminar style where the presenter starts presenting the idea, and within 10 minutes, you've got a discussion going on. Well, have you thought about this? Have you thought about that? What about this? I know somebody who can help you figure out that. And you get the hive mind of effectively 30 seminar participants in a seminar style environment, really trying to help you think through it. And it was extremely powerful, and it's kind of hard for me to do. VALUEx is not an aircraft carrier, but it's a big enough ship that you can't just go to everybody and say, okay, we're changing the format. It's going to be completely different. 60 of you won't be able to come back. It wouldn't be very nice. So I'm just pointing that out because it's interesting. You start something and then it develops its own momentum. It develops its own community, and the community develops its expectations. And even if there are some really good ideas that it would be impossible to implement without destroying it. So we've decided, because it's run by the team that I'm a part of, that we don't want it to grow. And so we're at capacity in this convention sports center in Klosters, and we kind of agree that there are a lot more space in Davos, which is not that far away, but it would change the nature of the event significantly. That in a way it would destroy it. So no, we're not moving to Davos. And I would tell you that when you get a group of 120 people, what's really fascinating is at 120 people, you start replicating the problems of society. So in a group of 120 people, you'll have no matter how you try and do it, you'll have your share of people who are there because over a period of 15 years of running VALUEx, not every single person is somebody that I necessarily want to invite back or spend an enormous amount more time with for all sorts of good reasons. But I don't believe that I can exclude them from the event, because if you became a part of the community, even if they're not contributing value to me by their presence, they might be contributing value to somebody else. And even if they're not contributing value to somebody else, they kind of like form a part of the social network. Now, if you go and exclude somebody, which I think that the World Economic Forum does do, you get invited for a number of years and then they just say, no, we're done with you. And there's good reasons for doing it, because in a way you kind of get rid of dry wood. But there's this nervousness and this salesy aspect to the World Economic Forum where you're kind of afraid you won't be invited back. And so you take away safety, and that has an impact. So if I want to kind of like have more turnover in the group that's there, I'll destroy other things. And so there are difficult choices to be made if one thinks about where it goes. But my expectation is that we'll stay in Klosters. It'll be around 120 people. I try to be inclusive and bring new people in, but there's a constraining factor that I don't want to exclude people who are already there. And the real measure, and I've said this a couple of times at the conference, is, and I'll end with my rambly thoughts, that the mic's about to come back to you, Stig, is that, and this is really, I'm genuinely, and this really does, it's part of I think my DNA, and it really does drive me. I don't need to own a big yacht. I don't need to be a billionaire. But boy, would it be fun if a few of my friends owned big yachts and are billionaires, and they're not kind of inviting me onto their yacht or whatever the hell else they're doing because they're trying to get something for me or because they owe me something, but because we're genuine friends and they just want to have my company and it would be fun to do. And so the real measure for me is, in 20 years, how many billionaires or how many extraordinarily successful people, where I once read an article in the New York Times about some group of guys who would meet once every week or maybe once every month in New York City, and they'd all lived these extraordinary lives. And the premise of the article was it had something to do with them getting together with each other once a week for these meetings. And so I'd judge it an extraordinary success, and I would judge my life a success if I could look back in 30 years, 20 years and say, wow, look at these amazing people and what they did in their lives. And against that measure, there's, we're only just getting started. There's a long way to go,
Well, Guy, thank you for doing such a wonderful service to the value investing community. And I would also just mention that I'll make sure to link to Ram's event, VALUEx in the Middle East,
which is
here in
superb.
November.
It's absolutely superb. Better than VALUEx clusters. Did I just say that? No, it isn't. We're better. But Ram's an incredible guy. He's got all the right models. He's living by all the right myths, if you like. So
That's wonderful. Yeah. Fantastic. And I can only say very, very nice things about Ram. So I hope someone in the audience would make it to that event in November. And again, I'll make sure to link to the website and how to sign up and all that good stuff.
So just for you, I don't know how Ram runs it, but one of the ways I run VALUEx is that you can't just buy a ticket. You can't just sign up, because you need to be known to the community. So if Ram's running it the same way, which I suspect he is, you'll have to find somebody who is already a part of that community and get them to recommend you. So that, because then, and I have this rule that even when somebody is recommended to me and they're a very, very good person to add to the VALUEx, I always make sure that I've met them, at least by Zoom, well before the conference, that they're a known entity into the group. So if you want to join VALUEx Middle East or VALUEx, you'll have to find a way to get to know the people who are already there and make yourself valuable to them. I hope you don't mind me sort of like adding.
No,
so.
please. Thank you for saying so, because I definitely don't want to overpromise at all. I wanted to share the love and make sure that more people in the value investing community knew about it. I hadn't heard about that event before I went to Clusters, and I might consider myself somewhat as an insider in the value investing community, but I'm clearly not. I never heard about any of the other VALUEx events, despite spending all my time on value investing, one capacity or the other. So sorry, I think it was very clumsy for me to send it like, wait, just go ahead and sign up. But
that's fine.
I think I got too excited about that wonderful event.
I think that what's really powerful, I mean, one of the things that seems to me, and this comes from a Toastmasters meeting format called Table Topics, in which every person is required to give an impromptu speech of, say, 2 minutes long on a topic that they didn't hear about 3 minutes beforehand. So they it's really about thinking on your feet. And so on the one hand, that's training and giving impromptu speeches. But there's another aspect to it, which is that when you have a group of 10, 20 people in the room and they each give a 2-minute speech, is that there are these really there are these tells. They talk about things that they didn't expect to talk about and say things about themselves and the world that they didn't expect to say. And suddenly you get this community arising. And so at VALUEx, we're kind of like trying to push that everybody gets a chance to talk to the group. And what you get as a result of that is that the 2 minutes that you spent, or the 5 or the 10 minutes, the person who you need to connect with, who's in the room, will read something about what you said, and it may be completely unrelated to the topic that you're discussing, maybe your accent or a reference to something, and that creates the connection that creates something. And so, you show up at VALUEx Clusters and you hear about VALUEx Middle East and you didn't know it existed. Somebody else shows up to VALUEx Clusters and discovered something else, or meet somebody they never expected to meet. It's kind of fun when I see and track those things. Really, really interesting. So I don't know if that was in answer to you, if it's just something that I wanted to say, but there we go.
So, Guy, before going to Clusters, and this is probably going to come across as a bit of a vain comment, but I sort of like want to turn the spotlight on you. But first, the vain component here. So my father asked me if I was going as Stig, I mean the private individual, or Stig from TIP, and I wasn't really sure how to answer, and it's kind of surprised me, and it also kind of like made me sad, but it's also surprised me. And I think that there's this dilemma where I would go to different conferences, not only just in clusters, but in, say, in Dubai or Omaha or whatnot, and perhaps get a bit of attention, perhaps also more attention that I like, and perhaps not feeling completely comfortable with that, but at the same time also be worried that I would miss it if I didn't have the option, as ridiculous as it probably sounds. And Guy, you're obviously a lot more known in the value investing community than me, and I was kind of curious to hear how you think about whenever you would go to different value investing events or settings, or just like the whole ecosystem we have around value investing. Do you feel that you're Guy Spier or Guy, or do you feel that you're Guy Spier, the value investor?
Yeah.
I don't know how to best
No,
explain
you
where I'm going with
it's a
this.
yeah, I totally get the question, and it's a spectacular question. And another way of putting it for me is that, and it happened for a while, somehow it's dropped off now, is that did they want to meet me, or did they want to meet the guy who wrote the book? And there was a certain point where people were disappointed because they realized that the person they were meeting was not the person who wrote the book. He'd grown since then. He changed his mind, and there are some things that I wrote in my book that I don't agree with anymore, that I think are actually quite stupid. And there's this kind of like disappointment, if you like. And so, how how do you navigate between a public persona and the private individual? And it seems to me, and it's a theme that just it's coming up for me. I don't know if it's coming up for you. It's just this dimension that, like it or not, if you become known to more people than you could ever meet in your lifetime, you're just going to have to manage that. And it seems to me that the key is to understand those two things and to manage it in a way that is consistent with your personality. And it can be very different depending on what your personality is. And so, and I want to sort of like just bring up a few examples, going back to the royal family, and it's the lessons we can learn from the royals who do that well. The reality is that we know absolutely nothing about the private personality of any of the royals that are so carefully watched in the UK, that the ones I am so familiar with. And the ones who do it really well, it seems to me, don't even attempt to project their actual personality when they're in their public roles. That's not their job. That's not why they're there. Prince William is not there because he has a good or a bad sense of humor, because he's particularly intelligent and knows a lot about history, or he's a good father or a bad father. He's there because he, as you so rightly put, he came out of a certain womb, and he's there to play a role. And you play that role in the best possible way when you don't interfere with it, when you don't create noise. In a way, it seems to me that and I think that I'm a fan of the younger brother and Meghan Markle, but it's to understand that the role that in order to do best as an employee of that firm, you need to separate your own personality from the way people see you, and that comes down to selecting what you wear. Because what you wear is, again, this sense of decorum or this sense of symbolism that you're using, and exactly what you wear and the color that you wear, and the color that you wear related to the other people around you, and where the badge goes, or if you don't wear a badge, or all of that counts. So that is an example of an extremely dichotomized, separated. But that's not you and me, and we're trying to be authentic in the real world. We're trying to be, or at least speaking for myself, but I think you're the same kind of person. You want to be, I want to be the same person everywhere I am. I don't want to have a public persona. And so my goal, and again, be aware of the dimension that it adds, but don't apply it necessarily in the same way that other people you've seen apply it. So certainly I don't have to live my life like a royal. I can try and merge the public and the private persona. And that is my goal. And I think that that's part of why people enjoy talking to me, because they see that the private and the public persona are the same thing. So if I'd have been your father, I'd have said, you're going as Stig. And by the way, the Stig that you are with your family and at home and personally should be and is the same Stig that is appearing at VALUEx and elsewhere in public. But then what's happened to me, so that's my goal, and I think that I've done a reasonably good job of it, better than I would have before I read the autobiography of Mahatma Gandhi. And I don't know if you might have actually certainly would have experienced it at VALUEx, because half the people at VALUEx would like to go on your show. So you'd have had a whole stream of people coming up to you, and at Berkshire Hathaway, I end up having a whole stream of people coming up to me, and there it's only become sort of like top of mind for me recently, where I see that Monish and I have very, very different personalities. So for Monish, as the best as I can see it, he's energized by people coming up to him. He thinks it's fun. He's happy to take the photographs. He's happy to banter a little bit, and it's only one day in the year, so he's not doing it every day of the week. And the difficulty that I think that I have with that, and that perhaps you have with that, is that it denudes. So when I go to Berkshire, and I am in that way at Berkshire, there's no meaningful interaction. So to be a celebrity is a very shallow experience, because people are there just looking, they're not actually interacting with me as an individual. They're interacting with their idea of who I am. And there's not even the time to kind of like create any real connection, because there's another person and another person, another person. And I personally find that exhausting. And I also find it kind of meaningless. And so I've had conversations with William Green about this, because he's in a similar kind of boat. So I don't want to create too many situations where I have many, many people coming up to me. And because unlike Monish, it drains me of energy. It doesn't fill me with energy. And I kind of find it a little bit meaningless. But at the same time, there's a benefit to me at being at the Berkshire meeting. I don't want to not go to the Berkshire meeting. And I want to be kind to those people, and I want to be a decent human being. So those are waters that I have to navigate, trying to be myself as much as I can. But I would say that, I think that writing a book as personal as I did is a kind of loss of your virginity. You can't ever go back. People now know things about me, and they feel like they know me personally. In many, many ways they do. And in a way, that's a loss of privacy. And the people who've a lot less privacy than what I understand, I mean, people like Barack Obama and many other people, they just yearn for the ability to walk around and not be noticed and not be known, and just be themselves and not have anybody react any differently to them. And that is a gift if you're not a public figure. That I have a friend who's Korean. He's extremely prominent personality in Korea. One of the things that he loves about being outside of Korea is he can just wander around and be normal, and he just cannot do that in public in Korea. So I've lost a little bit of that. Nowhere near. I've lost a little bit and learned enough to know that I don't really want to lose any more of it if I can avoid it. The privacy and anonymity is a good thing. There's also, okay, let's be clear. So why have I become, I don't know if I'm a celebrity. At the Berkshire Hathaway, I'm a minor celebrity. And it's in part because I wrote a book. It's the way that I wrote the book. It's having these very, very open, honest conversations. And, there's a part of me that wanted it. And why did I want it? Because I perceived that it was an important way to get the success that I craved. And I felt like if I'm well known, then I'll have easier time researching investment opportunities, and I'll have an easier time getting investors and all of those things. And I think that's probably true. And so I kind of, there's a certain price to be paid for that. Yes, I do have better conversations. And yes, people are more willing to pick up the phone to me and talk to me. But I think that I hope to manage it now. I don't want any more celebrity. I think I've got more than the optimal amount, actually. And in your case and in my case, and it doesn't help that I think you're more of an introvert than me, but I'm also, I believe, at the end of the day, an introvert. When I'm in spaces like the Berkshire Hathaway meeting, or when we're at VALUEx, then that's just something I have to manage. But again, a long and rambly answer to your question. My word to you is always be Stig Brodersen. Always be Stig Brodersen.
That's very kind of you to say, and sort of like to one of your previous points. Whenever you're a guy, no one's a prophet in his own country. People say different things whenever it's Guy compared to Guy, the value investor. So whenever you would go to a place like VALUEx, and you're very kind whenever I went there, sort of like to ask how I was doing and everything, and so thank you for bringing it up, so it doesn't sound like I'm complaining about going to VALUEx, because it was a wonderful experience.
Yeah.
But it was a bit like, yes, I'm going here as a private person, wanting to network, and you went up on stage and you said like, no solicitation, we're all here to
Yeah.
learn together, and it's like, yes, this is
Yeah.
awesome. Then you get flocked with people, and I roughly get like 2,000 requests to be on the podcast annually,
Wow.
and then I went to ValueX for my time off, and I just got flocked with people saying,
Well, actually,
let me go on your podcast. And I don't think there's anything wrong with. I also think it's important not to judge anyone. I kind of feel like I'm complaining and coming from a bad place here. Like,
actually, what I would say is that I wasn't aware that you were that sort of like crowded, because it's a kind of a violation of ValueX's ethos to do that. You can't walk up to Stig Brodersen and say, please may I be on your podcast. That is soliciting business. That is soliciting for yourself. You can't do it. And to the extent that it was done, it's not appropriate. What they can do is say, I love your podcast. And if you're ever looking, it's hard. If you're ever looking for guests, I'll be happy to help you find some. There's a fine line. So it's hard, because I would have preferred for that not to happen to you. And I can tell you, I was in a restaurant this summer, believe it or not. My wife and I discovered this incredible restaurant in the south of France that you only get to by boat. And so we went, and guess who comes and sits down? Elton John. Elton John is in this restaurant, and we're in this restaurant, And what's really fascinating about this restaurant, it's very, very hard to get a table, very, very hard to get a reservation. And I have absolutely no doubt that if anyone in the restaurant would have walked up to Elton John and said, oh, can I get an autograph or something, they would never have been able to get a table in that restaurant ever again. And so Elton John, we face a very, very minuscule fraction of what Elton John faces. In a way, it's the price of success. And you have a kind of a media business, you have a very successful podcast, and it's natural. I mean, I always find it interesting that when I speak to journalists at a major publication, or, I think I was on CNBC once, and I was on CNN once, like those people, I'd be like, oh, we should go for a coffee sometime, or, oh, can I send you a copy of my book, or can I put you on my holiday card list? And they have no interest. They have 1,000 people a day trying to do that with them, and you can try, but you're not going to get very far. And so you, in a way, have transitioned in your when you're around investors. It's just inevitable that they're going to want to be on your podcast, and they're going to be desperate to try and get on, and they're going to try all sorts of ruses to try and get on, and it's a reflection of your success. And it's just a price, part of the price you have to pay. You can't really go back, can you?
No, and I think, just as an editing note, Guy, I'm probably going to take out this point about me complaining about that there's so many people want to on the podcast, because I kind of feel like it comes across as very entitled. That was not my intention.
No, I don't think my personal view is it's not entitled. It's just a reflection of reality. It's reality that look, I've discovered on YouTube that I can watch this British journalist whose name always escapes me. And he's got a very, very successful YouTube show with millions of viewers. And he's got endless number of people who want to get onto his show. They're desperate to get on. That's just the way it is. And, there's a kind of it's not an 80-20 rule. It's a 99-1 rule. And you've, in terms of your podcast, have entered into that 1%. And that's a natural consequence. What I'd say is that, in a way, and I'm kind of doing this in real time, because I'm realizing the problem, and in a way, you cannot go back to being private Stig around investors. It's just, the world has changed, and there's all sorts of benefits that you get. You run a very successful podcast. There's also a price that you have to pay, and it's that you can't be private Stig when you're anywhere around a group of investors. And that's a shame, because you want to be private Stig. And I'd say that, to empathize to you, the problem with being public Stig is that when all these people are coming at you, you can't be natural, you can't learn, you can't discover, you can't ask questions, you can't evaluate, you can't have that random sort of thought or insight that helps you. And so that's a real, a freaking shame, if you like. And I just think that, and it may segue into a question that I know you'd put on the preparation for this. we cannot be the same person that we were. We have to modify and adjust and become different to the person that we were, and that's in a way I think what you're being challenged to do. Certainly for places like the Berkshire meeting and maybe VALUEx and other gatherings where, I just for people listening, I tell you, it comes up for me. So I'm at the Sequoia Fund, Ruane Cunniff's mutual funds annual meeting in New York City. This is like 2 decades ago. So I'm sitting there, and who sits down next to me but Lou Simpson? There's Lou Simpson. I mean, this guy is a hero. This guy is a god to me. I study his investment decisions. And, it's like a bit like that Elton John phenomenon. But of course, Elton John, he's just a singer, Lou Simpson. And there's Q&A. There's Jonathan Brandt on the stage. There's Bill Ruane there at the time. There's Carly Cunniff there. And what I want to do is turn to Lou Simpson and give him my business card. And sometimes I'm impressed I actually do the right thing. And I said, we're at a meeting, there's Q&A, just, you've noticed him. And then I saw that he was looking at me to see who the hell I was. Maybe he recognized me from something. This is way before I'd written my book. And I knew, again, don't turn and talk to him. Let's let him observe you quietly and let him see who you are. And I resisted the temptation. I'm reasonably sure that if I would have tried to turn and talk to him, he would have shut me down in no time. And then at the very end, as everybody was getting up, I said to him, Lou Simpson, obviously I know who you are. I'm Guy Spier. Obviously I'm a huge fan. I'd love to connect with you sometime. And I'd won the credit with him because I hadn't bugged him through the Q&A, because we were both there to do the Q&A, And so, what's my point? There are better ways to behave around the Stig Brodersens of the world. And then Stig Brodersen may well notice you. And, be there for the purpose of the meeting. The purpose of the meeting is to listen to people on the stage. So join Stig in listening to the people on the stage. Don't try and interfere with his concentration as he's trying to learn just like you are.
I remember we met up in Omaha. I want to say it was probably last year. So it wasn't this year. It was in 2023. And we met in the lobby at the hotel that we were staying at, and had a chance to sit down and chat. And you're such a nice person. Like one of the first things you talked about was, how can I help? It's just like it's just so wonderful speaking with you, Guy.
Stig, I think that something else that I realized about that conversation was it was in a way painful for me at Omaha because I realized that I just wanted to sit with you for 2 hours, because one of the qualities that you have is that you're extraordinarily curious, and you're curious in a very incisive way. And that for you is a joy, actually, trying to get to the bottom of something, trying to really understand it in a thorough way. And that's not something that happens when you're having these shallow conversations. And so the way I want to, it's a bit like what we're doing right now, which is kind of a joy, is to really try and understand and really and that requires at least 20 minutes, if not 2 or 3 hours of really, even a retreat where you kind of have multiple opportunities to think through the thing. And so what I realize is that you set next to zero value at making people feel good at a cocktail party. That is like, well, why? Why, when I could be diving into some really important topic with somebody or on my own? And so that creates a particular challenge for you when you're in these more shallow type environments. And what was painful for me is that I realized that if we would have met somewhere in a mountain lodge where people go for hikes in the morning and hang out in the afternoon, we would have had a 3-hour conversation about something. But
it was before transition to the last question. Sorry for being so long on your time, and thank you for being
this is so much fun. I'm having a great time.
Guys, so we meet up in the lobby, and I'm just excited to have a chance to hang out with you. And then this lovely couple comes up to us and wants to have our photo together.
Yes.
With I'm pretty sure it came for you and not for me. And so
yeah,
so there are a lot of things happening here. They were super, super nice.
Yeah, and all I want to do is talk to you. And now this damn photograph, this photograph's freaking meaningless. Yeah.
No, like I remember there were a lot of things happening at the time because you sort of like wanted to pull me away until like the side of where there
Yeah,
weren't too many people.
where nobody caught my eye. Exactly. I'm glad
Right.
you remember that.
And you were like you're super super nice, and I remember that I promised my wife I would give her a call at a specific time, and this is something about being very much aligned. Like I do what I say and say what I do, and here I have the opportunity to speak with Guy, and that's super super exciting. Also, I made a commitment to my wife that I would give her a call at a specific time because we want to make sure everything was okay and I was, across the pond and all of that. And that was like really, really tricky for me. I remember because it's about being like truthful, but at the
Yeah,
same time, you're also thinking whenever this lovely couple comes up to you, you better damn sure make sure to smile and give them a good experience.
yeah.
You also really want to have a chance to hang out with Guy because how wonderful is that?
Well, Guy wants to hang out with Stig because how wonderful is that? It goes both ways, dude.
It sort of like takes me sort of like to something I wanted to ask you for a very long time, and I'm almost want to apologize for my ramble because I kind of feel it's a very very long question where I'm going
Yeah,
to go in many different directions. So, I think it's important not to judge other people. Let me start that as the premise.
yeah.
We we had someone come on the show the other day. He was like very very kind, and he sent a note, and he was like he raised $10 million, and he was just super excited about
Wow.
getting a chance to do that. And that's amazing. Like I only know him as a very very good person. I didn't do the interview, but I only know him as a good person. And then I was thinking to myself, 10 million is not a lot of money for the Guy Spiers of the world. If you're a young upcoming asset manager, you might manage, I don't know, 15 million, and perhaps like it's huge if you can
Yeah,
like manage 10 million, and that person probably read all the books about, don't take no for an answer and go for it and all of those things. Like I think it's hard to judge other people for not taking no for an answer. And I'm thinking like 10 years back, 15 years back, whenever I first got started, thinking, wouldn't I have done the same thing to, I unsolicited messaged you, Guy, and said, famous person, please come on my podcast. It's like, and you were so kind enough to respond. And so, I think that there's an element of not be too harsh on other people whenever they do things that you might not do. Perhaps you've done the exact same thing if you're in their situation. um and then I also want to say that they say that heaven and hell are very similar. They have long forks and plenty of food, but in heaven they figured out that you can feed your neighbor. And it's hard for me to think of anyone in the value investing community who is as well liked as you, Guy. And I could say, I could take on my investor hat and say, well, that's because Guy has 26 years of being the S&P 500. But that's not why. There are a lot of people who've been have track records who are not nice people. People like you because you're so authentic, and because you're vulnerable, and because you're just a wonderful human being. And Grant has this framework of givers, matchers, and takers, which is just so inspiring. And it's very, very clear that you're a giver. Now, I think I hopefully I'm going to to come to my question here, but
Yeah, but it is fascinating just to listen. So you're on a
so
good thought roll.
I think I mentioned before that I might be getting roughly 2,000 requests a year just to be on the podcast, and then there are other favors to ask. So let's say that there I don't know, let's just say 50 messages on various platforms every day about different favors, 20, whatever it might be. And you want to be helpful, you want to respond to everyone, you want to be decent, you want to be kind. And then whenever you tried that for some time, you realize, let's say that you had 20 requests, a big proportion of those 20 comes back and asks for another favor.
Yeah,
Plus you get another 20 in the next day. And so it doesn't require a lot of math to figure out at some point in time it's just going to be too much.
yeah.
How do you handle that, being a giver, but at the same time you don't want to surround yourself with matchers and takers, and you just
Yeah.
really want to be Guy, a very, very nice person? How do you handle all of that?
It's it's a spectacular question, and before I get to, I think I have some helpful answers. Is this idea of you kind of like earlier on, before you got to the question, you talked about the person who's engaging in behaviors that are not ideal, but I or you would have done maybe the same thing earlier on in our careers, and it's so hard to get on one's path in life and to get started and to make progress. And maybe we should give them the benefit of the doubt the same way that we would have liked to have been given the benefit of the doubt. All of those things, which just raise really, really important issues that I'd like to come back to. But to go to the question, I think that if Adam Grant, I've met him once. He hasn't asked me, but I'd love to get into a sort of rewrite or an additional chapter of his book, where the give and take matches givers and takers as a dynamic process. So when you start discerning in your behaviors between matching, giving, and taking, your environment changes. And so it requires modifications of our behavior. And so you're absolutely right. It's a hydra, to use the Greek mythological idea, that you cut off one head and two heads appear. And you give to somebody and they come back with another request and yet another request. And so I like to think now of that Adam Grant framework as a sorting mechanism. So some people will come back after you've met their request in a helpful way with a second request. And now I've just learned something really important about them. Because other people, if I meet their request or I am helpful to them in some way, will find a way to help me back. And so if I help somebody in some way and they come back with a second request, and they live in the world in such a way where they kind of go, well, I'll try Guy because he helped me once, so maybe he'll help me again. Then yes, so I'll help them once, but I can't help them a second time. Maybe I can help them 2 times, but not a third time. I have to shut them out, or I have to move them away, or move them to a more distant setting where they can't make those requests that often. So what I'm actually doing is I'm sorting through people. I'm discovering by how they react to my behavior, and reassigning them. And people can move categories, and they can learn and come into a different category. Or there may be some people who are takers, but for some reason we need them or want them in our lives, and we're willing to take the cost of having them as takers. So I think it's not a sort of like, the boundaries are malleable. People can move back across the boundaries, and one can choose to have somebody at a closer distance for one reason or another. So the set of people that I'm helping is not the same set all the time. There are people who coming into that set, and then they move themselves out potentially. And I'll give you an example. People have asked me so many times, what's your relationship to Warren Buffett? And I have moved myself out very, intelligently. And, the only option available to me is out of the set of people who would call up Warren Buffett to see if he's got time for a coffee when I'm in Omaha, because that is a request for his time that would very quickly get me, out of his good books and into the far periphery of his universe. The only way I can be in any way a part of his universe is to not make any requests. So I move myself out of that set. But there are some people, and unfortunately there are a lot of them, where one has to actually move them out, and they don't even realize that they're not being helpful to you, where one just... So I guess it's a dynamic process. You certainly don't, somebody comes back with 2 or 3 requests and doesn't try to help you. You just have to see them as matches or takers. And one has to develop systems. So I would tell you that, so an engine is the way Monish would describe it. So rather than being a reciprocating person or being a giving person, which you certainly want to be, to the extent that you're successful, you need to teach those systems to the people around you and create gatekeepers and create sort of like rules as to how to approach all the different kinds of requests that come in, for example. So you might find that I might find, let's talk about me, because I know me and I don't know exactly the circumstances that you find yourself in. So we used to give internships to a lot of people, and we discovered that it was just a huge drain and very, very hard for us. So we had to develop rules around. I used to be the guy who offered internships. Now I've had to discipline myself when I'm anywhere in the world. Outside of the office, I have to say, wow, I can't offer the internship. The only thing I can do is propose you to the team. And the only time that we offer an internship if the team is unanimous, but I can certainly propose you to the team. And that even goes for family members. And so I created a process. And now, and what I find really interesting to do is, if I've had an intern, for example, and I get an enormous number of internship requests, often the intern might be a good gatekeeper or a good facilitator. So I'll say, the only way you can become an intern is, first of all, by getting the approval of these prior interns who were there, because they know what the environment is like. And then you need to go to my staff. And if there's unanimous approval there, then you can come be my intern. So best of luck. I'd love to help you with that process. And the way you need to, so that's about it as much as you can do. So the point to Adam Grant is, or the point that the chapter that I would have Adam Grant write is, how do you manage it as a dynamic process? So that the bad doesn't drive out the good in a certain way, that you don't end up investing all your time in giving to people who are not. There's something else that can happen is, these people are not asking for more, and they're not coming back with multiple requests, but they're just not the right people to be helping in your case. So I'll tell you something that I've done in a way maybe I haven't done too much of it, but I need to shift the focus of my attention, of my team's attention. I love seeing people who are just out of college, just out of business schools, people who are budding analysts, people who want to start their funds. I want to help them to succeed. I think that's lovely. And I want them all to become billionaires. I'll send them all bottles of champagne when they have more AUM than I do, or when they have higher returns. And I want to be able to be invited onto their yachts. But I also have to focus on what's going to move the needle for me. And I've helped a certain number of people. I would have liked to have helped more. And I hope I do help more, but that's not going to move the needle for me to have helped. I don't know, if we take the VALUEx community, in total, current and past VALUExers, call it 200, 250. Helping another 50 people get set up in business or to progress their careers as analysts, that's not going to help me progress in my life. So I can spend all of my time helping those people, or my staff, my organization can spend all of its time helping those people. But it's not going to help me to progress in my life. So, I have to decide what I want to do with my life. If I just want to help people, that's fine. But if I want the business to progress, interestingly enough, and I know this because I run a minuscule podcast, but, you can take many, startup emerging managers, new blood managers, and it's helping them, but it's not helping your podcast. And I suspect that for the Investors Podcast, I just put it out to you. Have you thought about interviewing Larry Summers, interviewing Jerome Powell, interviewing Janet Yellen? That's probably where you have to go. And none of the guys at VALUEx can help you with that. So it's not just about sorting through people. It's about directing your helping energies in a direction that can actually help you to progress your life. So that's kind of a long, rambly answer. But the short answer is, apply it in a dynamic way, and apply it intelligently. And in a way, actually, the word that comes to my mind is malice. So we have to say no, have to set up barriers, have to set up gatekeepers, have to set up processes that protect you. You will not be effective. And here's what it's easy for me enough to say it to you, Stig, but I'm extremely guilty of it. and so I will not say it about you, I'll say it about me. It is an enormous betrayal of ourselves, and we have to be true to ourselves, to lose ourselves in helping other people. That is actually a kind of a sin. It's a grievous sin. Put on your own life jacket before helping somebody else. Your most important job is to live the most meaningful life. And yes, you want to be helpful to people along the way, but unless your goal is to be Mother Teresa, you cannot allow all the people who want help to drag you into what is not the most important thing for you. If I'm Roger Federer, there's a point at which I have to say to all the school kids, it's been great talking to you. Now I'm going to go and train some real tennis with my one coach who can help me. And yes, I know you want me to spend another 3 days playing tennis with you and inspiring you and talking to you about tennis. My life mission is to go win Wimbledon. It's not to be a tennis coach. And to go win Wimbledon, I have to go and play with my coach. I have to do a structured regime. And you guys aren't part of it. That's just it. And it's so funny because I'm saying with such clarity and confidence, but in a way, the person who really needs to take that advice is me. And it really, it's just incredible actually, because literally earlier today, and was it yesterday, I was addressing exactly this topic with 2 members of my team, that I need to upgrade my thinking. So, but the good news is it's a sign of success, And what's the real key, and I think that the person who knows the most about this, who really understands it well, actually, 2 people out of 1 in the room debating on it is William Green and Monish Pabrai. So, because William is like, because I can remember at that Berkshire meeting, I do remember that, like, I'm in the middle of conversation, now we have to stand up for a photograph, and those people were so happy for the photograph. And I was like, because William's really close, I was like, that sucked, William, because it happened with William as well, or maybe William was somewhere in the area. It was like, no, you've got to be kind. You've got to be kind. But then there's another, so where it also happens is, I say to Monish, I know that this person might not work out as a good intern, but I really want to give them a chance. And yes, they haven't come at me in the right way, but you know what? I would not have come at a Guy Spier in the right way and there's another model that Monish has, which is, the cost of a false negative is extraordinarily high. And we can take, a false positive. So the person that we hire that doesn't work out is very expensive to get rid of. Whereas the person that we never hired, even if they would have worked out, it doesn't cost us much. So we ought to grade very, very harshly, and if in doubt, say no rather than saying yes. But how do you balance that with being fair, and being kind and being, so I'd want to see William Green and Monish Pabrai talk about those 2 things and see, I'd like to put the case to William Green and to Monish Pabrai and say, okay, so here's the situation. I'm talking to Stig, Stig's talking to me. We want to dive into a deep conversation. We're having so much fun. And then 2 very kind, nice people want to get a photograph, but it interrupts our conversation. And part of me wants to say goodbye, thank you, not right now. And the other part says interrupt the conversation. See what Monish and William do. And the short, and sorry for the rambly answer, I'm actually landing this plane right now and giving the mic back to you. And the short answer is, be intelligent about it. Don't be blind in applying the Adam Grant framework. Don't be blind in applying the false negatives, false positives framework, and do the intelligent thing. Evolve your thinking to the circumstances as they unfold, and look to see people who've already solved that problem. You and I are not the first people who needed to solve that problem. And so we can look and see how Warren Buffett solves it. And very briefly, because I haven't, how does Warren Buffett solve it? Well, first of all, Warren Buffett's in private except for 1 day of the year. 1 day of the year, he's public Warren Buffett. And certainly Warren Buffett doesn't have any meaningful conversations on the Berkshire Hathaway meeting day. And he's totally into it and accepts it because it's 1 day of his life. So there's one lesson right there, is limit and frame the times when you're a public guy. And actually, if I want to be private Guy with private Stig, all I need to do is say, Stig, is it Aarhus is where you live?
Yeah.
Aarhus? Yeah, so I can
Close
say,
enough.
Stig, I'm on my way to Aarhus, and if you have time for a coffee, I'd be delighted to entertain you. And just don't do it at a time when you're being public Guy.
So I know what Manish would say because he told me, and I'm kind of like sad that it wasn't recorded. It's also fair that it's not being recorded, but I think he would he would forgive me for bringing that up. Because he was asking me. I think it was probably before the last Berkshire meeting, and I was like, I went there in 2023 where I met you. Yeah, it was a lot of fun, and it wasn't the best experience. Meeting you was, sorry, I want to clarify that meeting
The
you was a
Berkshire
great
meeting.
experience, but the Berkshire meeting wasn't the best experience, and there was a few things that um was probably flattering, but to me was just a bit too much, and
Yeah.
I like to stand there in the corner with my phone and not speak with anyone, and so Manish asked me like whether I was going, and I said like no. I kind of felt like after 2023, and we have members on our team now who absolutely love going there, and I kind of felt why would I go there when others from the team can go and have fun and meet up with you, which I also did, and so I was just saying like no to Manish, and then he looked at me and he was like, but you owe it to the community, and it's one day or a few days, like this is what you're supposed to do. And then he mentioned Warren Buffett, and he talked about like, so I guess we can conclude a few things. Point one, Manish is a better person than me.
No, that's not true.
I'm going to preface that. The other thing I wanted to mention to this is, and I should probably say I'm really sorry that I hope that Guy doesn't invoice me for. He probably should invoice me for, a bill for whining about all my problems here by the end of the call. But
No, but sorry, Stig, you're not whining about your problems. You're exploring really important issues that come up for you, and they come up for many people. And so what you're struggling with, other people are struggling with. So you're not whining at all. You're trying to understand. You're trying to tear stuff apart. So I just want to make that
Thank
point
you.
as you now back to you.
And I sort of like wanted to make it about the listener and not about me, in the sense of course we all have unique circumstances, but I think a lot of people listening to this can resonate with not having enough time to please as many people as you want to please. And I hope that this conversation is sort of like in that light, and it's not Stig complaining about things he probably shouldn't be complaining about. So I just wanted to preface the conversation by saying so.
I hope that the following helps is everyone. Some of the best personalities are introverts. What does that mean? That doesn't mean they don't like people. That doesn't mean they mind being in crowds. But it means that the way I see it, because I think that I'm similar, is my social battery gets drained down faster. So, I can maybe do it for an hour or two, but then I'm kind of done and I need to go and rest. And some people can continue, like my wife, for 5, 6, 7 hours, and they just love it. So don't apologize for that attribute of yours. It's an attribute that you have. You're naturally an introvert, but that gives you other qualities. And so, and Monish is also, I would argue, an introvert, but he can make his social battery last longer on days like the Berkshire meeting. And it's exactly what he said to me. You owe it to the community. Take care of the community. And the answer, I think, for you and me, and I'm not saying that we're the same. We each have to work it out for our own personal attributes. Is I'll be there for the community in a way that takes care of me. And maybe, Monish, you can be there all day, but I'll be there for a couple of hours and then I'll go to my room. I actually, at the Berkshire meeting this year, in the afternoon, I went and listened to it in my room, in part because I could just be there and not interact with people. And so we do as much as we can, and that's okay. And far better to be in one's room or not at the meeting, I would argue, than to be in a place where one's not generous and giving to those people coming up to you. And I think that there are so many ways to manage it intelligently. One way is to only go to the overflow room, a place where you're less likely to be recognized. Another way is to say, I'm going to be there in the morning, and then in the afternoon, I'll go to my room. Or, you're not obligated to go to the Berkshire meeting. So all good. But I actually think that in your case, you ought to go, even though we wouldn't get much time together. and you manage yourself in a different way, you know?
Well, Guy, thank you for all the advice. And thank you for the inspiration. Can I just say, just in general, I sort of like wanted to say something nicer, but
But
and more eloquent, but just thank you. Can I?
yeah, but I think that it's very kind of you to call it advice. I think that what we've been doing is exploring and sort of kicking a football around and trying to understand. And it's not like I know, you know, what I can do is I can say, "Oh, I think that I've had this problem as well, and I try to solve it in this way." And so I'm actually not giving advice. I'm trying to just share with you in this case how I'm trying to solve problems that many of us face. And you're also trying to solve those problems. And by the way, I don't know that I have the right answer. To go back to Jordan Peterson, but it all goes all the way back to the height of Greek civilization and of the Renaissance, is that the answers don't lie in sitting in a room and thinking about it, although that's probably important. They lie in coming with your perspective and having it bounce off somebody else's perspective and having them react to what you're saying and learning from what they're saying and disagreeing with them. And so that's what we're doing. We're wrestling with issues that come up and we're trying to figure it out. And it's so much fun to do. So don't call it advice. It's just a conversation.
The journey is the best part, Guy. How can we best end this interview? Any
So
concluding remarks?
I think I probably need to make plans to come visit you in Aarhus. I think that would be good. You know, I think,
Please.
yeah, there we can have a real conversation that we could do an offline conversation even. It's really been fun talking to you, Stig. And I think that for me as a kind of like a mini podcast or anybody else, I think that the most fun is when, and this has been an enormous amount of fun, is when, you know, you're coming out of a genuine sense of curiosity, trying to figure stuff out. You're asking real questions, challenging questions, and I've been learning all the way through this. I'm a better person at the end of this than I was at the beginning of this. So you don't have to thank me for my time. I thank you for giving us the opportunity to have this conversation.
Thank you. I have no better way to end this interview, so I'll just say thank you. You just said I should thank you, but I'm going to do it anyway.
Thanking
thank you so
people
much,
is
guys.
always good. Thank you, Stig. It's never, you're never wrong to say thank you, you know? So thank you.
Many cheap businesses are rightfully cheap and can always get cheaper in the future. And many expensive businesses are rightfully expensive and can get even pricier in the future. The most important part of this, according to Fisher, was to nail down the likelihood of a business continuing to grow in the future. If you know the business will continue to grow, especially for multiple years in the future, you can justify paying a higher price. But you must be certain that this will happen. I think this is why Warren Buffett places such a large emphasis on certainty during his analytical process. If he lacks the certainty required to understand whether profits will be higher in the future, he'll simply throw the business in the too hard pile and move on to something else.